Of a little over 0.5% across the European benchmark yesterday, and we're looking to add to that today with the FTSE 100 pointed gains of 0.6%. Over in Germany, despite the concerns around BASF, the DAX looking to add 73 points, and over in France, the CAC 40 looking to add 0.5%. Let's flip the board then and see how these markets open this Friday, with the tech enthusiasm still a catalyst, it seems. About $165 billion of value added across the tech space, across the semiconductor space and beyond, as that outlook from TSMC percolated across the markets yesterday. The FTSE 100 currently up 0.2% and grinding higher as we speak, despite the fact that we have a warning again on the recession risks out of the UK, with consumer vulnerability being flagged by that retail sales drop for the month of December. You're now seeing gains of 0.5% across the FTSE 100. Over in Spain, the Spanish IBEX is currently adding 39 points. In Italy, the Italian FTSE MIB adding 167 points, up 0.5%, and optimism as well in France, with the CAC 40 up 0.6%. Germany a little bit more muted, but still adding 60 points, up 0.3% positive across these main indexes then, and building on the European gains of yesterday. Let's flip the board and see how the sector story is shaking up across the 12 main sectors that we look at, of course. The banking sector adding 0.5%. The strength, though, really coming through for the likes of energy and technology. So continue to build the tech theme here. Again, the TSMC outlook. You saw that upside coming through from ASML, of course, listed in Europe, but also NVIDIA stateside. A lot of those tech companies getting a lift from that outlook from TSMC, and the sector adding 0.6% today. Banks in positive territory, as I mentioned. Financial sector is also adding gains of 0.4%. Slightly more muted across autos, still 0.1% is the gain there. Industrials adding 0.5%, and basic resources a lift there as well, 0.7%. Iron ore prices slightly higher in the session today. We continue, of course, to watch the data out of China and the linkages there to the iron ore price and basic resources and miners. But across your main sectors, you're seeing optimism, enthusiasm so far in this session. We look out still, of course, for central bank speak to see if it derails any of that. Across the benchmark, though, you're seeing 0.5% is the gain at 472. Let's dive deeper then into the main themes affecting the trading day and bring in Sam Umstead from our Markets Today blog. Sam, I mentioned the comments from Raphael Bostic. How do you read what he's been saying about the Fed's next steps?
So I think actually most of what he said was broadly in line with what his colleagues have said. We're going to remain data dependent. We've got to see some more data come through until we can really decide whether we've done enough on hikes. He actually mentioned the first cut in the third quarter, which is a little bit further on than I think most may have expected, but didn't really dent anything. And as you just mentioned, Tom, a lot of optimism and enthusiasm coming through the market, a bit risk on today. Doesn't seem to have dented any of that, at least so far.
Can we just lock in a June cut now from the European Central Bank? Christine Lagarde said that was her view, at least for now, and she gave the context and the caveat that she remains, and they remain data dependent. But we've got a Bloomberg piece talking about the fact that this is pretty much consensus now amongst economists and those who sit on the board of the ECB that June is their most likely month when they cut.
Yeah, and market bets have moved in that direction too. The ECB over the course of this week have been really on message. They have been pushing back against the moves that happened over the course of December, and actually markets have taken heed of it. There is still a 50-50 chance of a rate cut coming just slightly before that, but overall it does appear that everyone thinks it's going to be June, and from this story we have out today, that economists think that the ECB are going to judge that pretty much exactly right.
Okay, and switching focus to China, and we were talking, I was discussing with Mark Cardmore, whether or not we're starting to see signs of panic now in Chinese markets, given the more than 20% downside we've seen on the CSI 300, the benchmark, over the last 12 months or so. And now we have the news that one of the biggest brokerages, if not the biggest brokerage, CITIC, is restricting short trades in China. What's your take on that?
Yeah, I mean, I'd go in line with that. I think it's not a good look, you know, and it's been a really poor start to the year, you know, especially for Chinese stocks. We had the Chinese economic data out there this week, very mixed. It didn't get a good reception, and just generally, so it's not just the short selling, but also quite a lot of volume in some exchange traded funds, sort of indicating potentially a little bit of state buying going on. So again, that kind of tinkering around the edges that we talked about a lot over the course of last year, but nothing really that's going to change sentiment. And China, of course, came into the year with pretty poor sentiment, coming out of portfolios, sort of really falling out of favour, and it doesn't seem like this would do anything to turn that around.
How do you think traders are going to be reassessing then the picture for the UK, given that retail sales print, concerns, again, the headline on the BN now that recession fears are back, and we're seeing yields moving lower across the UK debt markets, particularly at the front end, yields down 5 basis points on the 2-year at 4.24. What is your take on how the retail data percolates through these markets?
Yeah, and I think, you know, the headline number is a lot worse than expected, right? As I sort of mentioned earlier, there is quite a big distortion from Black Friday, but overall,
the pull forward.
Yeah, exactly. And so, but even so, the fact that people are doing that they are going and buying in the sales instead of and trying to really spread the cost over the course of December indicates something about the resilience of consumers underneath that. The numbers will settle out over the course of the next few months. We'll get a bit of a better reading, but overall, it does indicate that a lot of that resilience that we talked about so much last year, you know, retail sales consistently doing much better than expected, may be starting to fade out as you know, still quite a lot of hikes to still transmit into the economy. Okay. So the resilience story may be going away.
Okay, still one to watch. Sam Onslow, thank you very much indeed, of course, from our markets today. Blogging, get more from Sam and the rest of the team on the front page of the Bloomberg UK website or by typing TLIV go on the terminal. Coming up, we continue our coverage from the World Economic Forum in Davos. We're going to be speaking to the Prime Minister of Greece, Kyriakos Mitsotakis. That is next. This is Bloomberg.
I think this will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some point that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in?
I'm in.
I'm in.
We're in. Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question.
Great question.
That's a question I get all night.
Bloomberg, top experts, great questions.
This is Markets Today. We are 8 minutes into the European trading day. You're seeing gains across the European benchmark of 0.5%. Let's check in on some of the individual stocks on the move this Friday with Joe Easton. Joe, what is standing out to you?
So the big surprise, Tom, for me is that these chemical stocks are joining in with the broader rally that you mentioned there in the markets today. We're seeing BASF up around 1%, Croda, Lanxess and K&S all seeing some small gains as well. BASF reporting a 50% drop in profit, but as we said in Stocks to Watch, these shares all down sharply given a number of warnings from the sector over the past year. So potentially all that negativity around personal care products, chemicals that go into things like moisturizer and also agriculture priced into the market. So not a huge reaction for those at the moment. That is a bit of a surprise in terms of some of those pre-market calls. We were saying we did not do any puns yesterday. Chemicals puns are a little bit difficult, but I am kind of in my element with these ones, so I'll kind of go with that one, I think. But we'll move over to the next board and have a look at a couple of UK stocks. Persimmon double upgraded today, this one over at Morgan Stanley, slightly more positive on the outlook for UK home builders. They don't yet see a blue sky scenario, as they say, given the regulatory concerns around volumes. Berkeley Group gets a price target upgrade from them as well. A couple of telecom stocks dropping today. Ericsson and Nokia, both new underweights at Barclays, and they are citing India, one of their biggest markets. They're saying that 5G spending in India is slowing down. The Indian summer is over, as they write in their note today. So both of those shares dropping. Finally, on the last board, we've got a big mover in the UK. We've got Wincanton. That's here. This is Wincanton here. Takeover offer. It's a logistics firm potentially getting bought out at a massive premium today. 47%, that one's up. ABB, this one over in Switzerland. Concern about US Congress looking at their relationship with China. That's weighing on that one. The automation firm. Banco Santander upgrades Richemont after the 10% rally for that stock, given their strong watch sales. And DFS Furniture, I've just bought a sofa from them, and it's not boosting their share price at the moment. They're down 0.2%. Weakness in the UK. The sale is on, and the stock is down 0.2%.
Okay, Joe Easton from our team, thank you very much indeed. Let's get back to Davos now, where Francine Lacqua is standing by with the Prime Minister of Greece. Fran.
Yeah, thank you so much. I am delighted to be joined by Kyriakos Mitsotakis. As you say, Tom, the Prime Minister of Greece. Thank you, Prime Minister, for giving us a little bit of your busy schedule. When you look at Greece's performance in terms of GDP, it's actually better than most. Are you worried that this year is still going to be difficult given all of the unknowns?
I think this is going to be a very good year for the Greek economy. We have built what I consider to be a sustainable momentum. The Greek economy is growing much faster than the Eurozone average, and there are good reasons for that. We're bringing in significant amount of foreign direct investment. Our debt to GDP is declining at a record pace. If you look at the Greek spreads, the Greek bonds are trading close to the Spanish bonds. Who would have thought that this would have been possible during the years of the fiscal crisis? So I think we're at the beginning of a long-term growth cycle for the Greek economy. Of course, there are geopolitical issues and concerns. I mean, the cost of living is still a big concern for us, but I remain very optimistic.
So, Prime Minister, what exactly is the next step for the economy? Like, what will make you get a further, I guess, better rating?
I think what we need to do is to balance our fiscal prudence, to continue to produce healthy primary surpluses and bring down our debt to GDP ratio with sustainable growth. We've proven that this is actually something that is doable. We've reduced taxes during our first term. We have improved the business environment. I think we've changed the image of the country abroad, because many people still thought of Greece as a basket case. Greece is no longer a basket case. It's a very successful economy, and this is attracting a lot of interest. I had a chance to witness it again during my 36 hours in Davos.
There's also a lot of interest. The process for the IPO of Athens International Airport has started. When are you expecting the sale of 30%?
Well, this should happen during the first months of 2024, but it's not just the Athens airport. As you know, we have very successfully sold off stakes in our banks. The NBG transaction, which took place last year, was oversubscribed 8 times. There is going to be a significant chunk of Piraeus Bank that will be sold off. And what I do expect, Francine, is also new IPOs on the Greek stock exchange. I mean, Greek companies, they need to raise capital, and for the first time, the Greek stock market is an attractive alternative.
But for the Athens airport, what will determine the exact timing? Is it market conditions or something else?
Yes, but the decision has been taken. It will happen during the first months of 2024. And again, it's a very successful airport, and it's benefiting from the increase in tourism. Athens has become a year-round destination, a fantastic city. There's tremendous investment taking place in infrastructure in Athens. We are targeting the high-end market, and of course, everything that is being built in Greece today has to be sustainable. We're very much focused on green and sustainable tourism. So the Athens airport will be a very good proxy for those interested in investing in the tourism sector.
Prime Minister, talk to me a little bit about the banks. So this is also divesting stakes in some of the banks. How's that going, and when can we expect further news?
Well, you'd expect news on Piraeus soon. Again, we should take stock of the progress that was made last year. I mean, Eurobank was fully privatized. Again, the NBG transaction tremendously successful. A big Italian bank investing in Alpha Bank. Again, this is a vote of confidence in the banking sector and in the Greek economy. But just remember, Francine, when we had these discussions 4 years ago, many people had concerns about the banking sector, the NPEs. We brought them down significantly. Now everyone seems to be very bullish about Greek banks, and frankly, we need more competition in the Greek banking sector. We need banks to extend more credit to the real economy.
And Prime Minister, have you already made up your mind if it's the full 27% of Piraeus that will be on the market, or just a part of it?
We have not. It's not just a decision that is made solely by us, but I don't have any further details on this, but it will be a significant chunk.
Prime Minister, I mean, you will also bring to Parliament a draft law for same-sex marriage that you pledged after being re-elected. Are you confident that it will pass through?
Yes, if you remember, we discussed this during my first interview I gave to you in July. It was part of our program. Marriage equality will be tabled at the next cabinet meeting, which will actually take place next week and will be approved. And then after a period of public consultation, will be presented to Parliament. And I'm very optimistic that it will become Greek law, within the first 2 weeks of the month of February.
So you're expecting little resistance, or
look? I mean, what I've said very openly is that these are important issues for many people, and that's why I have not imposed any party discipline. What I've always been making the case that this is not an issue that should divide Greek society, and so far we've had a very healthy debate in Greece. I think we've explained the case for marriage equality, but also for protecting the rights of those kids that already exist. It's a fact, and at the end of the day, I believe that this is something which will be legislated by Greek Parliament soon.
What comes after that? Is there a strategic plan for also more progressive laws?
Look, I think we have made addressing inequality a key sort of driver of our policies. But again, in order to do that, you need an economy that is growing. So you need a healthy fiscal surplus, and we have been able to create fiscal space to support the more vulnerable Greeks. I mean, now again, there is a real cost of living crisis in Greece. So we want to support especially young families, families with kids. We're particularly concerned about the declining Greek population. So this is an area of priority for us. How do we support families? How do we support people who are actually forced to rent now that rents are going up? This is a key priority for my government, and you'd expect many measures in this direction to be announced very soon.
Prime Minister, how much do you worry, of course, about all the conflicts around the world and the impact and the uncertainty that this has worldwide?
Look, I think this Davos was rather optimistic about the shape of the global economy, but concerned about the geopolitics. And of course, we are in the Eastern Mediterranean. We're a pillar of stability in a rather turbulent region. The Ukraine war is still raging. So of course there is, significant concern about the geopolitics, and we're doing our best to help in order for the conflict not to escalate in the Middle East. And of course, we'll be making the case why Ukraine needs needs strong financial assistance by the European Union, and I expect us at the next European Council to approve the 50 billion assistance to Ukraine that we have pledged, in accordance, but also complemented by a revision in our own budget, because we need more money for migration, and we need more money to address climate change and natural catastrophes.
Prime Minister, thank you so much for your time today. That was, of course, Kyriakos Mitsotakis, the Prime Minister of Greece. With that, Tom, I'm going to send it back to you in London, and we'll have plenty more throughout the day.
Okay, fantastic. Francine Lacroix, thank you very much indeed, of course, at the World Economic Forum in Davos. Coming up, German lawmakers approved the federal government's delayed finance plan for 2024. We bring you the details next. This is Bloomberg.
Steve's ability on the course may not be etched into any record books, but following him around, it's clear that it's not for lack of trying.
Jeez.
We were constantly hustling behind him as he caught up with executives in the portfolio companies and reminisced with former and current players.
He's a day trader. He called himself self-made day trader. Yeah. And so he's on the bus after a game in New England, and he's day trading on the bus, and Bill Belichick sees him and cuts him on the spot.
You know, in many ways, it's a convention, right, of the people that I don't see maybe once a year. And so it's kind of all come together. My firm, our charity, our fundraising efforts, and then the friends that are around. My dad and my brother, it all happens right there as a confluence of all these parts of my life that have found its common center.
Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern every weekday morning at 6 a.m. Eastern, only on Bloomberg.
Happy Friday. This is Markets Today, 21 minutes into the European trading day. You're seeing gains across the European benchmark of 0.4%. Let's get to some of the other top stories on the Bloomberg terminal right now. President Biden says strikes against Iran-backed Houthi militants in Yemen will continue, though he admitted they have not halted the group's attacks in the Red Sea. The Houthis warn they are taking concrete steps to improve their military capabilities. The US is preparing to introduce a plan that requires banks to tap the Fed's discount window at least once a year. The move is aimed at reducing stigma and ensuring lenders are ready for troubled times. Bolstering banks' liquidity backstops has become a priority for US regulators after last year's regional bank crisis revealed that some weren't even set up operationally to quickly borrow from the facility. The US Congress has passed a temporary spending bill to avert a partial US government shutdown this weekend. The legislation will be sent to the White House, where President Biden plans to sign it. The short-term package is meant to give lawmakers time to complete negotiations on annual funding for the fiscal year that began in October. JP Morgan has raised CEO Jamie Dimon's pay to $36 million after it reported the highest profit in the history of American banking. His total pay is up 4.3% from 2022 with a $1.5 million salary and the rest coming as performance-based incentives. JP Morgan revenue last year was just short of $50 billion US. To Germany now, where the budgets and lawmakers have approved the federal government's delayed finance plan for 2024, which restores a constitutional limit on net new borrowing for the first time since 2019. Joining me now for the details is Bloomberg's Oliver Crook on the ground for us in Berlin. Oliver, what is the latest then on the budget?
Yeah, so Tom, basically it got through the budget committee, which is not really the final step, but it's gotten through them, and then now needs to go to the parliament. We're going to hear from the different parties today. They're all going to give separate press conferences and kind of weigh in on this budget, and then it'll go to the parliament for the final vote in early February. But really, at the end of the day, while the mechanics of this budget story may be ending now, the consequences of it may really just be beginning. As we saw all week, Tom, there's higher taxes in this budget, there's lower subsidies, and we saw the fruit of that, right? We had 8 days of protests from the farmers all across Germany, culminated here in Berlin on Monday, where you had literally 5,000 tractors on the streets, 10,000 people, very, very unhappy. You had a train strike last week, and yesterday it was the truckers' turn here in Berlin to air their discontent. So really, maybe the end of the budget story, but really the beginning of the political budget story that is beginning here in Germany.
Are there any silver linings in any of this at all? Ollie, you talk about the truckers, the tractors clogging up the streets of Berlin. What is the outlook for the German economy as we think about these decisions around the budget?
Yeah, Tom, I was really looking through some of the surveys and trying to find glimmers of hope, and honestly, I was not really terribly able to. And that's really the story here, right? Because 2023, as we learned this week, was a year of contraction for the German economy. 2024 is not looking a heck of a lot better. So we talked to Christian Lindner, the finance minister of Germany, of Davos, about kind of what his prescriptions are in order to solve the problems of this economy in Germany. They really are, for him, as a sort of libertarian, supply-side reform, more flexibility in the labor market, a labor market which is lacking people, lower taxes. You now have higher taxes as a consequence of this budget ruling. And what he wants is also the white whale of German economic reform, killing red tape, dialing back bureaucracy. A lot of people talk about it. Not a lot of people are doing it. The problem is going to be politically. We asked Christian Lindner, how does he feel about the fact that today the second biggest party in the polls in Germany is the far right? Have a listen.
They have very easy answers for very complicated challenges. Think about the Brexit. And the situation is similar in Germany. Our right-wing populists, they suggest Germany would benefit from exiting the European Union, but the single market is of paramount importance for our economy.
And here you can see it on the screen, really the trouble that they have in the polling here with the far right, the AfD, more than doubling their share. And really, this is the challenge for the government, to convince the population of their economic reform against a dimming economic backdrop. There's a lot of uncertainty. What is sure is going to be not a great year economically and a very challenging year politically in Germany.
Okay, Bloomberg's Oliver Crook, thank you very much indeed with the details around some form of agreement, at least for now, around the budget and further steps to come, of course, on that front. Coming up, we go back to Davos. We're going to be speaking with Valdis Dombrovskis, the European Commission's Executive Vice President and Trade Commissioner. That interview coming up next. This is Bloomberg.
feel like this age of abundance over the last few years of just how much was being made?
For my personal taste, I am thrilled at what I get to find every night if I have time to look for something. So I personally don't think too much was made. I think the customer will tell us when there's too much made and they won't watch things. And I think part of the misalignment I talked about before is imagine if things didn't get picked up or movies didn't get made that people didn't watch or go to see. That's how it used to be. The customer decided. I do think there's going to be less made in the middle price range. I think there's going to be more made in the higher price range because when you get to global events like Barbie or Oppenheimer or Super Mario Brothers, it's worth the investment, and it's clear that the audience is there and they just need to be given what they want. The middle, which ends up quickly on one of the services in a way that we're watching movies that we don't know how they got made or when they got made and all of that. I think that will probably be curated better, and I hope there's more inexpensive things that give more people the chance to express themselves and have their work seen.
Always on the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
This is Markets Today. We are 30 minutes into the European trading day, and here are your top stories. Tech is back in the driver's seat as TSMC's positive outlook fuels a $165 billion global rally in chip stocks and drives the Nasdaq 100 to a record high. The pound takes a dip and gilt yields fall as UK retail sales plummet in December, falling the most in 3 years during the crucial holiday season. Traders add to bets on BOE rate cuts. Plus, it is the final day of the World Economic Forum in Davos. We will be speaking to European Commission Executive Vice President Valdis Dombrovskis in just the next minute or so, and the EIB President Nadia Calvino. Let's check in on these markets. You are set for a second straight day of gains across European stocks, at least for now. The gains coming through across the benchmark, 0.3%. Some of the earlier optimism being pared a little bit, but you're still adding 1.5 points to the European stock 600 at 472. The UK is gaining, the FTSE 100 gaining on the back of the strength coming through from the likes of banks, financial services and insurers. The FTSE 100 adding 0.7%, despite the fact that there is concern, of course, that we are getting closer to our recessionary territory with that slump in retail sales for the month of December. The DAX currently up 0.5%, adding 0.3%. Let's break it down on a sector-by-sector basis then. You're seeing a little bit of upside in terms of prices coming through across commodities, whether it's copper, iron ore, or oil. Across your sectors, top of the list is insurance, gaining 0.9%, followed by F&B, up 0.8%. Just 3 sectors in negative territory. Autos down 0.1%. Let's get back to the World Economic Forum now in Davos, where Bloomberg's Francine Lacqua is standing by with another guest. Fran.
Thank you so much, Tom. I am delighted to be joined by Valdis Dombrovskis. He is the European Commission's Executive Vice President and Trade Commissioner. Thank you, Executive Vice President, for joining us.
Good morning.
There's so much talk about trade. There's so much concern about conflicts, the fact that supply chains will have to move even further, and the fact that we could see shocks. How do you view 2024 when it comes to trade and supply chains?
It's clear that 2024 is going to be a challenging year as we see that all the geopolitical conflicts are continuing. Russia's aggression against Ukraine, now conflict in the Middle East. So all this certainly has potential for disruption of trade and supply chains, even though the forecast for the growth of global trade for this year, according to the World Trade Organization, is quite positive. There's a forecast of 3.3% growth in trade, but certainly there are a number of risks which we need to follow.
Yeah. Executive Vice President, China has also launched an anti-dumping investigation into French brandy following a series of cases opened by the Commission, including on EV cases. Is there a danger that we're slowly walking into quite a nasty trade war with China?
Well, first of
of all, it's important that we stay within a global rules-based system. So what we are doing in terms of our anti-subsidy investigation concerning Chinese battery electrical vehicles, we are doing in full compliance with WTO rules, with WTO procedures, and I think it's important to stay within that framework. We do not really see the case on dumping on brandy products, so ready to discuss it with China, but it's important that it doesn't become like arbitrary, but we stay within a legal international framework.
But does the Commission actually have other cases prepared against Chinese products that you will announce ahead of the European elections?
First of all, whatever we are doing it based on facts on investigation. So it has to be facts-based. It's not something we will be announcing arbitrarily.
But you're looking at new cases? Are there products that worry the Commission right now?
Well, certainly we have a number of worries concerning both market access barriers in China and also Chinese industrial subsidies. We had been raising those topics also in our meetings with Chinese representatives, both in high-level economic dialogue, also more recently in EU-China summit. So certainly this topic will stay on our agenda because, well, we will continue to engage with China. China is our second biggest trading partner, but our trade is very unbalanced. So we need to have more balance and reciprocity in our relations.
But so I think what we're trying to understand is whether the elections mean that even if you are working on cases, those will be held off, or whether, you know, that we can expect something big, or is it unclear what will happen?
No, as I said, in any case, we need to stay facts-based and and act when it's necessary.
Executive Vice President, you'll also meet, I think, 30 actually senior U.S. officials on the 30th of January in the Trade and Technology Council. What are you hoping and expecting from that meeting?
Well, indeed. So we're having our Trade and Technology Council with U.S. in Washington, D.C. later this month, and so we will continue our engagement on across various technology sectors, on certainly topics on related with economic security will feature quite prominently, and we'll be advancing and actually also holding a large stakeholder event on transatlantic initiative on sustainable trade.
But it's quite difficult to get something on steel and aluminium. Does that overshadow what you're trying to do on technology?
Well, first of all, on steel and aluminium, this was a separate work stream, and also when we were actually establishing Trade and Technology Council, we agreed that we keep this steel and aluminium as a separate work stream. So currently, in a sense, we rolled all over the existing system. So U.S. rolled over their tariff rate quotas, so not to come back to the tariffs. We rolled over our suspension of the measures, but certainly we continue to seek a solution which allows us actually to get rid of those tariff rate quotas which are currently being imposed.
How much, again, I know one of the biggest worries actually is the commitment to Ukraine aid. I don't know how much the Commission is prepared to go to make sure that also Hungary signs off on this 50 billion euro package.
Well, we are working very intensively on this, and on 1st of February we are going to have a EU summit where hopefully this agreement is going to be reached, because, well, we are already overdue. European Commission came with this proposal of 50 billion euros Ukraine facility already in June last year. We are already approaching February, and Ukraine actually needs this financing, so we need actually to take the decisions and provide this financing. And it's all the more critical that we also see delays on U.S. side. They're also still discussing their financial support package.
But when you look at the European Union, would you give something like an emerging break, for example, in the recovery fund, or even a midterm review package to get Budapest on side?
Well, first of all, this Ukraine facility is part of the EU's multi-annual financial framework midterm review, so it's already part of that package.
Executive Vice President, when you look at some of the risks out there, and I know there's a lot of conflict, what do you worry about the most, or what's more likely? Is it Donald Trump in the presidency, in the White House? Is it far right, of course, outcomes in the European elections, or is it a full-on trade war with China?
Well, I would say my biggest worry is continued Russia's aggression against Ukraine, and if we are not containing this aggression, if we are not stopping Russia, the prospect of Russia actually going further and starting new aggressive wars. And they are very openly talking about this. If you look now on this Russia's so-called presidential elections, Putin is campaigning on a slogan that Russia's borders are ending nowhere. And what kind of signal it's sending to Europe, to neighboring countries. So Europe needs really to work very seriously to strengthen its defense capacity and provide all necessary support to Ukraine.
But and as you said, that would be very difficult without U.S. support. Do you see that waning? And what happens if Donald Trump gets into the White House?
Well, clearly we're much stronger when if the Western democratic world work together, and from the EU side, that's what we are very much willing to do and continue this engagement.
Executive Vice President, thank you so much for joining us. That was Valdis Dombrovskis, the European Commission's Executive Vice President and Trade Commissioner. With that, Tom, I'm going to send it back to you in London.
Okay, Bloomberg's Francine Lacroix, of course, on the ground for us in Davos at the World Economic Forum, speaking to Valdis Dombrovskis. Thank you very much indeed. Coming up, we head back to the Swiss Alps and WEF. We're going to be speaking to Nadia Calvino, President of the European Investment Bank. That is next. This is Bloomberg.
I used to have a data point I used to share that 75% of the people had never heard a phone ringing. Just think about it. I didn't say had never used a phone. They'd never heard it ringing. Today, 75% of the African people have a mobile phone. They use one. Okay? And we will do the same with the internet in the next 5 years. You know, we will do it as an industry, as entrepreneurs. All we need is the space, and we need investment support, because we are the best investment case for this in the world.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
This is Markets Today. We are 42 minutes into the European trading session. European stocks gaining just 0.3%. Let's get back to Davos now, where our live coverage of the World Economic Forum continues. Bloomberg's Francine Lacroix on the ground with another guest. Fran.
Yeah, thank you so much. I'm delighted to be joined by Nadia Calvino, the president of the European Investment Bank. Thank you so much, President Calvino, for joining us. I mean, you've just started in the job, so how can we look at the priority of what you want to achieve, maybe change, or just your priorities at the EIB?
Yes, indeed. Thanks for having me, Francine. I'm delighted to see you again. And I just took over 1st of January. I was vice president of the Spanish government, so didn't have a lot of time to adjust. But what I'm doing in these first weeks is reaching out and engaging with partners, with other multilateral development institutions, with governments, with stakeholders, allies like the Vaccine Alliance, just to precisely have a clear view of what we're doing and what we should do better or differently going forward. But there are already a couple of clear priorities that will continue to be very high on our top list. Climate. I mean, the EIB has consolidated its brand, I think, as the climate bank, and we will continue in that direction. And then secondly, the whole support for Ukraine playing a key role on the global arena, and in particular, Europe's neighborhood.
So if you look at green financing, and again, you're just getting started, but is the investor appetite ripe to actually do a lot more on that, or because of the conflicts and the uncertainties, it could take a little bit longer?
Well, we're absolutely committed to the green finance. We were pioneers in issuing green bonds, also in committing to devote more than 50% of our balance sheet and every year to climate finance. And we reached and we outperformed that target in 22. We will continue to go in that direction going forward. We also have a clear commitment to contribute to 1 trillion investments up to 2030 in green finance. So it's not for nothing that we're called and known as the climate bank. And we need to scale up because we have great technologies in Europe, but we need to scale them up so that they become affordable also for normal citizens and throughout the world. And that is, I think, our challenge and our priority going forward.
And do you think there's still a lot of investor appetite for this to go behind? I guess when you have competing crises, it's difficult maybe for some investors to focus on all of them.
Well, definitely we have competing crises and challenges and priorities, but fighting climate change and tackling it, and also seizing the opportunities that come from climate change in terms of new technologies and cleaner and a better environment. I think that this is a challenge of our time and our generation, and we cannot just ignore it. And we are doing it, we are tackling it. Europe is leading in many areas, and we should continue to have this leadership, and the European Investment Bank, being the financial arm of the EU, can support these policies.
President Calvino, what role do you see the EIB actually having in defense?
Well, that's an area where we have already been active. We have a strategic partnership and a strategic program to invest 6 billion euros, which we have upgraded to 8 billion euros only recently, in areas such as R&D, cybersecurity, space, also all that has to do with dual-use technologies. And I think we can continue to go in that direction, doing as much as possible and responding to the good projects that exist in these areas.
I mean, is it possible that that increases, especially if there's Donald Trump in the White House? And how do you do that without, I guess, risking your amazing rating?
Yeah, well, we have a AAA rating, not for nothing. We have a CET1 capital ratio of 34%. I mean, this is, and we have a AAA, and we have a clear mandate, and we have very sound finances. We've been profitable since the inception of the bank, so we have a good basis to go forward. And I don't think that there should be any doubt about it at all. And we have already been active in several areas related to security and defense, and we should respond to demands and good projects that exist in this area. In this area, as well as others, what we have is a very solid technical assessment that looks at the viability of individual projects from the economic and financial point of view, from the environmental point of view, and technical point of view. I think we should continue on that direction.
But are you comfortable that actually the European Union has enough financing to help Ukraine, support Ukraine if the U.S. pulls out?
Well, it's quite, well, first of all, I hope the U.S. doesn't pull out. I mean, let's start from that scenario. I really cannot envisage. I mean, we've been very united in supporting Ukraine. The EU is strongly committed to supporting Ukraine, and I hope that our international partners continue to do so too. But it is clear that the financing needs for Ukraine will be immense, not only supporting the public sector and the war effort right now, but it's it's more in the reconstruction of Ukraine and investment in infrastructures that will be very much necessary after the war, which hopefully will end soon. That's where I see the European Investment Bank playing a very important role, working hand in hand alongside other key institutions like the European Bank for Reconstruction and Development and other multilateral development banks and financing institutions. Also mobilizing private finance. You know, the EIB has a key role to de-risk investments and thus mobilize private investment.
When you look at some of, I guess, the popularity of Europe around the world, the capital markets, always comes up, and it says actually the EU just needs to get it done. What are your biggest hopes in trying to make this region more competitive?
Well, certainly, we've been talking about capital market union for many years, yes, and there are big plans in terms of unifying the rules, unifying the supervision, and making the whole framework and infrastructure of capital markets more integrated, and I think we should pursue that. But in the meantime, I also think we have to really be practical and focus on some elements where Europe has strengths. Green finance, I think, is an area at point, and the European Investment Bank, I think, can be a catalyzer so that we continue to be leading in the green transition area, and green finance is one of the key headlines for what a capital market union could look like in Europe.
What do you think what is your biggest concern actually about the threats that the EU is facing right now?
Well, I think that we're all particularly concerned about the geopolitical tensions. I mean, the world is changing. The global order that has served us so well for the last 80 years is now changing, and that's, I many times referred to this as the tectonic plates shifting, and they're creating holes in some areas, they're clashing in others, and this is a time where I think we should be as united as possible and cooperate, because the challenges that we have, from health and resilience to environmental challenges and digitalization, these are shared challenges for all of us around the world. So we should really try to cooperate as much as possible. And I hope that discussions here in Davos are helpful in that regard.
Let's hope. Nadia Calvino, thank you so much for joining us. I was, of course, the president of the European Investment Bank. With that, Tom, I'm going to send it back to you in London. And, of course, we'll have plenty more from a snowy Davos throughout the day.
Okay, Francine Lacqua there at the World Economic Forum for us in Davos. Plenty more coming up, as Francine says. Don't miss our discussion on the global economic outlook with panelists including ECB President Christine Lagarde, German Finance Minister Christian Lindner, hosted by Bloomberg's Francine Lacqua. We're going to have that on Bloomberg TV. That's 10 a.m. London time, so tune in for that. Stay with us. This is Bloomberg.
The EU is one of the largest and wealthiest consumer markets in the world, and there are very few global companies that can afford not to trade in the EU. So as the price for accessing the European market, these companies need to obey European regulations. That's not surprising. But often these companies choose that they will extend the European standards across their global conduct and their global production because they want to avoid the cost of complying with multiple different regulatory regimes. So there are benefits to standardization, benefits to uniform production. So all the EU needs to do is to regulate the single market. It is then the market forces and the business incentives of global companies that transform that EU rule.
Well, I think 2024 will be a good year. It'll start out slower in the sense that, interest rates are still pretty high, and the Fed will keep them that way. Everybody has their own guess, probably till the second half at some point in there. So that'll sort of have a little bit of sort of a baffling effect. Stock market had such a run in the fourth quarter that you wouldn't expect that to really take off and go. And the economy is slowing a bit. That's normal with high interest rates. So on the other side of the ledger, the expectation that interest rates are going down is creating animal spirits again. And we did, at Blackstone, we did 6 private equity investments in 6 weeks at the end of the year after a slow year. And we're much busier now.
Yeah.
In a way, it represents some type of capitulation for people who were holding back for 2 years. So we're optimistic for this year.
But Steve, are you worried that if actually we don't get those cuts promised by the Fed, because a lot of the good news is already priced in markets, that people will start waning on the deals a little bit? So for the moment, you're optimistic. Is second half of the year a little bit trickier?
We will get the cuts because the way we measure inflation at Blackstone, we're already right around the 2%. The fact that the Fed's using different numbers, for rents and real estate, we think they're sort of looking at 6% inflation in rents and residential real estate, and we're the largest owner of residential real estate. We think it's 0 to 1. Let's bet on us on this one because we're the people actually doing it. And if you correct the index for that difference between what's really going on and they're saying it's 6.2, you get around 2%. So I think I'm quite confident that they'll be lowering rates.
Okay, Blackstone CEO, of course, Steve Schwarzman, speaking to Bloomberg's Francine Lacroix. Let's check in on your movers for you then today. Across the bench, what we're seeing, modest gains of around 0.3%. Lifted the hood, though, and there's a lot of interest coming through. ABB revealing that it is indeed being, at least its operations in China, being reviewed by US Congress. That stock then taking a hit on the back of that news. Ericsson has been downgraded to underweight by Barclays. That stock, along with Nokia, taking a big hit amongst the biggest losers across the European space. Richemont, very different story there, getting an upgrade after the boost to the forecast that we saw yesterday, raised to outperform at Grupo Santander, and a double upgrade for Persimmon from Morgan Stanley, saying that the house builder is best positioned for a tick-up in house building here in the UK, gaining 1.5%. So a look there at some of the individual stocks on the move, as broadly you continue to see a risk-on mood across these equity markets. US futures pointing to gains of 0.2% on the S&P E-minis. Don't miss a discussion, of course, on the global economic outlook with panelists including ECB President Christine Lagarde and the German Finance Minister Christian Lindner, hosted by Bloomberg's Francine Lacroix. We are going to have that panel live on Bloomberg TV in a little over 1 hour's time, 10 a.m. London time. That is it for the markets today. You can get insights from us and the team on the front page of the Bloomberg UK website or by typing TLIV GO on the terminal. Happy Friday. The Pulse is next. This is Bloomberg.
much oil to be found in the lower 48 at this point, or even in, let's say, Alaska as well, or mostly we know where all the oil is, and there's no more big Permian Basin kind of deposits anywhere?
People have said that over time, and then we've always been surprised. And so the U.S. has been explored more than any other place in the world. I think the industry has a good idea, but technology allows you sometimes to recover things that you haven't been able to before. That's the story of shale. The other one that continues to be a positive story is deepwater Gulf of Mexico, where we'll go out and drill in a mile or more of water depth and then go down several more miles and find large fields. And the Gulf of Mexico is still relatively underexplored compared to the onshore. So I think there's still room for more discoveries.
Top names in climate finance are on Bloomberg.
I can't tell whether you're optimistic or pessimistic about climate finance.
A lot of great stuff is happening, but is it enough? No, it's not enough.
I'm biased. I'm a huge investor in both fission and fusion, and hoping that it comes in time.
Transition is not going to be an event. It's a process.
But at the end of the day, it's the right thing for the planet, it's the right thing for the industry, and there is business opportunity.
DOJ or other authorities
could face bigger challenges next.
It was going to keep Great World Cup. This is a three.
As the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
Good morning, everyone, and welcome to our last day of our special coverage from the World Economic Forum. I'm Francine Lacqua here live in Davos. Now, here's what's coming up on today's program. Tech back in the driver's seat after TSMC's outlook drove a $160 billion global rally in chip stocks. Now, UK recession risks grow as retail sales plummet in December, falling the most in 3 years. Traders add to bets on BOE rate cuts. Plus, it's the final day of the World Economic Forum. We'll also be joined this hour by the Saudi finance minister. Also, don't miss a discussion that I'll be hosting on the global economic outlook. Panelists include the ECB president Christine Lagarde, the German finance minister Christian Lindner. We'll bring you that live on Bloomberg, and that's at 10 a.m. London time. But first, the frenzy over new anti-obesity drugs has seen Denmark's Novo Nordisk become the most valuable company in Europe. Novo Holdings is responsible for managing the assets of the Novo Nordisk Foundation, one of the largest enterprise foundations in the world. Now, it's also the controlling shareholder of Novo Nordisk. So I'm very pleased to be joined by Kasim Kutai, the chief executive of Novo Holdings. Thank you so much for making the time and braving the weather.
Pleasure, Frank.
I know.
Well, gosh, what a cold morning.
In Davos.
Pleasure to be with you.
With your money tank, I guess, bigger than ever, will you be even more active, or will you be active, full stop, in 2024 in buying companies and doing M&A?
Absolutely. So we will continue to scale our activities because, as you said, we obviously have significant dividends coming from our operating companies. We have two operating companies, Novo Nordisk and Novozymes, so we need to scale up and put that money to good work on behalf and for the benefit of the foundation and the great work that they do. So we expect to be busier than ever, and indeed are looking to potentially open one new office this year as well, so taking our total to 7 offices.
So offices, but also M&A? Is there a company that you'd be looking to acquire to make the fit better?
Yes, so we do M&A, particularly out of one of our teams that we call Principal Investments, which is within our life science division. And there we do a fair amount of buyout activity in the life science and healthcare sector. I can't go into too much detail, but we did a couple of them last year, and we anticipate doing a fair amount more in 2024, and indeed going forward, because the cash flows that are coming our way are going to be obviously quite significant if you look at the forecasts in terms of how the GLP-1 class is going to be doing in the coming years.
So a fair amount more. I mean, do you have actually an idea of how much you want to spend and what regions you want to target?
Sure. So we actually just put in place our new strategy. We call it Strategy 2030. That's going to take us through to to 2030, and essentially it reconfirms our asset allocation today. And at a broad level, if you look at our investment portfolio, 50% of that is going to be allocated to life sciences, 50% will be capital investments, which is our non-life science activities. We will, roughly speaking, maintain that allocation. Asia is fairly new for us. We opened Singapore 3 years ago. I expect we're going to open another Asia office in 24, and we see a fair amount of scaling that's going to take place there across our life science activities.
And what are you most excited about? I mean, would this be, for example, to target other companies that deal with obesity, or do you feel like you have that covered?
No, so we're not a strategic investor. We don't invest on behalf of Novo Nordisk. Our mandate is to generate attractive long-term returns on the assets of the Novo Nordisk Foundation, obviously for the benefit of people and society. So we are not a strategic investor. We are a return-focused and based investor, and indeed we try and avoid the areas that Novo Nordisk focuses on. So we're not investing in diabetes and obesity as such. But we think about it more in terms of our divisions and our groups. So we've got a venture team doing biotech ventures, and we see a lot of activity there. We actually had a very active year because we found valuations very attractive. As you know, the biotech sector took a bit of a hammering starting in about late 21, so we found 23 an very interesting time to take advantage of that. Then we have a growth equity team, and then we have the principal investment team, which is our buyout team. But growth equity, in terms of Asia, is a very exciting place, and that's where we're deploying a lot of capital.
Even in terms of valuations?
Even in terms of valuations, actually, yes. I mean, I think we have seen some interesting opportunities. Obviously, India is a bit of an exception to that. Valuations are, yes, I mean, we all know where the multiples are. But actually, across the rest of Asia, we see some very interesting opportunities. But despite the valuations in India, we have been very actively investing.
I mean, India has high valuations maybe for a reason.
Correct.
Right? Is there a place for India to almost rival China now that geopolitics is changing, really I guess, trade wars between the U.S. and China?
Yeah, I mean, depends what you mean by rivalry, but certainly India is becoming a very important destination for the reshoring that's taking place. But, we don't think about it in terms of rivalry. We think about it in terms of the healthcare opportunity. And whether it be China or whether it be India, if you look at the healthcare needs of those societies, they're significant. And that's exactly what we're investing against.
And again, if you look, for example, also at insurance in India, this is something, health insurance. It's not something that's, it's something that we're really just at the cusp of that.
Absolutely. So I'd even go broader. I would say universal healthcare coverage across Asia, including India. I mean, that's clearly, as these societies develop, as the middle class grows, it's an inevitability. It's a question of time. We're beginning to see the beginnings of broader healthcare coverage, but several of those nations have ambitions to have universal healthcare coverage in place. So that, plus the combination of the burgeoning healthcare insurance industry in those markets, I'm glad you mentioned that, because those are exactly the sort of themes that make us excited about the region and why we're investing so actively there.
And this is really, is it like a 2024 game changer in terms of actually making sure that the trend is there? Does it depend on growth, I imagine, right? But also the mentality of politicians there and what the citizens want.
Yes, I mean, I don't know if 2024 is necessarily a game changer. I think these trends have been working themselves for a while, but certainly we see an acceleration of these trends. But 22, 23 were all very exciting years for us in that region. And aside from Asia, of course, we will be scaling some other of our activities as well.
Were you surprised at how much, of course, the obesity treatments really captured, valuation, captured the imagination of everyone? Because it seems that every single life science biotech company now wants to be in that space.
Yes. No, obviously, Novo Nordisk has really blazed a trail in terms of obesity treatment, and I think the scientific data, particularly around semaglutide, if you look at things like the SELECT trial data, all really talk to the comorbidities. I mean, that's really the important thing that we need to be focused on. This is not just about obesity, it's about all the comorbidities around obesity, whether it be cardiovascular diseases, kidney diseases, hypertension, etc. And I think the scientific data today clearly supports the trend and the need to treat obesity in order to treat a lot of other conditions, and that in turn speaks to preventive healthcare and medicine, which I think is something that is critical for our societies to be focused on.
So how much do you expect that market to continue growing in the coming years?
Look, I mean, I can't comment on specifics, and that's obviously for the company to comment on, but the forecasts are all out there in terms of analyst research, and every time I open an analyst research report, the number is even higher. So I think as there's a broader appreciation, and as the scientific data and publications like the SELECT trial data from Novo Nordisk support the need to treat obesity in order to also treat these other comorbidities, that's going to be a very positive tailwind.
Now, we've had a number of fabulous conversations on inflation, because
Yes.
this, of course, is what is slightly obsessive for investors and monetary
Yes.
policy. If inflation comes down, and I don't know whether you think we've reached peak, does it make your life easier as an investor?
Yes, I mean, I think what makes our life easier as an investor is, more importantly, certainty. I mean, at the end of the day, whether inflation is at 2 or 2.5 or closer to 3, I think the world will adapt. But clearly, I think this is one of the things that's going to add to volatility in 2024, despite what I believe to be a very constructive, actually, economic backdrop, is the uncertainty about when will rates start to decline, by how much, and indeed what is the terminus where they will finally settle. And you put that along with the geopolitical issues that are before us, and I think 2024 will be a year where we need to fasten our seatbelts, so to speak.
Okay, thank you so much for your time today. Kasim Kutai there, the Chief Executive of Novo Holdings. Coming up, we'll also be speaking to Saudi Arabia's finance minister as concerns about stability heighten in the Middle East. That's next, and this is Bloomberg.
This will probably go down in history as one of, if not the largest financial crime ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got weirder and weirder.
I don't think he even had almost a conception at some points that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in? I'm in.
I'm in.
We're
in. Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Welcome back. Now, Saudi Arabia has expressed concern about Middle East security as the fallout from the Israel-Hamas war spreads across the region. To talk about that, to talk, of course, about finance across the region, I'm delighted to be joined by Saudi Arabia's Finance Minister, Mohammed Al-Jadaan. So for this interview, also, we welcome our Bloomberg Radio audience. We're cross-platform, Minister. Thank you so much for joining us. 2024 is going to be an interesting year. It could be a difficult year. What are your main concerns?
Well, I came to Davos with certain concerns. I think a lot of people here are concerned about the geopolitics, fragmentation. I think fragmentation is, at least to some extent, is under control, but still it is an issue for the world economy. I mean, as IMF said, it may actually shrink the world economy by 2.5 to 7% of the GDP, global GDP. So it's a serious concern.
Minister, when you look at some of the policies that Saudi Arabia will put in place this year, what will be your three top priorities?
Our top priorities is to double down on what we are doing in terms of reform and diversifying our economy. We do want to be distracted by what's happening. We do want to be derailed by what's happening. That said, we are also engaging heavily in our diplomatic machine to make sure that we de-escalate in the region, bring more wisdom, and try and find solutions to situations in the region.
I mean, what do you do with the price of oil right now? I know that one of the strategies was, of course, cutting production. That makes it harder against the balance of books. How do you go forward from this?
I'm not worried about that at all, actually. I mean, in 23, when we announced a year ago, we announced the projection for the revenues. It was on the backdrop of $100 a barrel and a production of about 11 million barrels. Mm-hmm. We ended the year with 20% less on the price, 17% less on the production, but still our revenues came above what we projected. We are conservative in our projections, so we are managing it with that line.
Minister, I think in December you also said that some projects associated actually with Vision 2030 would be delayed. I don't know what that means January 2024. So what do you see a delay in? And does that mean that some will take priorities or will be sped up?
I think the game is efficiency and the game is economic value. So you want to make sure that every dollar that you spend, every real that you spend in the economy is not leaking, i.e. you don't need to import too much for your own development, but rather develop your own economy. That's number one, which is a key priority. Number two is overheating. Even if you have the capacity to spend, you do want to spend too much that will actually cause more inflation. So these two balances are very important in what we are doing, prioritizing what needs to be done now, what needs to be done by 26, what needs to be done by 2030, what can be extended to 35. This process is ongoing.
Can you update us on any changes in income tax for individuals in the kingdom?
There is no intention at all in Saudi Arabia to impose income tax on individuals. That has been our position very clearly. We mobilized local resources. We have VAT, we have income tax on corporates and foreign investors, and we have the zakat for the locals, and no intention of changing that. We are actually trying to rationalize some of the burden on the economy to make it even more business friendly.
Minister, can you also update us on any financing, actually, that Saudi Arabia will put in place, whether it's Eurobonds or other ways of issuance?
We were in the markets early in January. We issued what we wanted to issue in the first quarter. We announced our debt plan for the year just to be more predictable for the market. We will tap the markets as opportunities arise. I think it's very important. And obviously, market conditions will dictate when to go to the market and for how much. We need to manage our liabilities, not only for this year, but also for the years to come.
Yeah, and what you announced actually was a three-tranche, $12 billion bond. So where will the financing of this go?
Well, we have a deficit of about 2% of GDP this year, so we need to finance our deficit. But Also, we need to accelerate some of the expenditure. We have logistical projects, logistics, whether it is railroads, ports, airports that we are building. We have significant water and water treatment plants that we wanted to expand because we wanted to make sure that services to our people is provided without interruption. So, and renewables. Obviously, we have a lot of renewable projects that we need to make sure that we have the financing for.
Minister, we're also about to do the Global Economic Outlook panel together. What are you most confident about in the world economy? 2023 could have been a very difficult year in terms of financing and cuts. We got through it. Is there not too much optimism about the world economy?
I think there is actually good signs that things are moving in the right direction, but still, I think we need to do more. I think multilateral development institutions are reinventing themselves, which is actually very good. Low-income countries need a lot of support. They need growth. We are lacking growth, and we need to make sure that we find ways to help low-income countries find a path to growth.
And this would be through private partnerships or private-public partnerships? I mean, and actually, is there a danger that we're so distracted with all the crises that we forget actually also this underlying need?
I think we are distracted and possibly have the tendency to deal with the immediate issues, which need to be attended to, like inflation and others. But we also need to look at the medium term. We need to make sure that we actually work and implement policies that will actually help growth medium and long term. Otherwise, we will end up with sluggish growth.
And on the geopolitics, what concerns you about trade and supply chains changing? Do you see that as something that could last a long time, or is it just too soon to say?
I think fragmentation directly means inflation. And those who thought that they are going to hurt their opponents are realizing that it is also hurting themselves and their people and therefore their voters. And that is actually bringing an ease. I think there are a lot of initiatives that we see now between North and South, between China and the US, for example, which is easing tension and possibly limiting what is restricted, which is actually a good sign. However, we are seeing significant trade restrictions imposed in 22, for example. 3,000 restrictions were imposed compared to 19, about, I think, 3 times more than what was in 19. That is alarming, but I'm hopeful that we are going to see a more relaxed approach to the fragmentation that will help actually trade. Obviously, geopolitics impact trade, and we wanted to make sure that the navigation routes are kept safe. Crews of ships going through the navigation routes are kept safe and not be harmed.
Minister, thank you so much for your time today. That was Mohammed Al Jadaan, the Saudi Arabia's finance minister. Actually, we have to go together to this Global Economic Outlook panel. So with that, we'll be back top of the hour. We'll discuss this Global Economic Outlook to wrap up the week here in Davos. Panels include the ECB President Christine Lagarde, the German Finance Minister Christian Lindner, and of course, the WTO Secretary General. The Pulse continues in just a few minutes, and this is Bloomberg.
Steve's ability on the course may not be etched into any record books, but following him around, it's clear that it's not for lack of trying.
Jeez.
We were constantly hustling behind him as he caught up with executives in the portfolio companies and reminisced with former and current players.
He's a day trader. He called himself self-made day trader. Yes. And so he's on the bus after a game in New England, and he's day trading on the bus, and Bill Belichick sees him and cuts him on the spot.
In many ways, it's a convention, right, of the people that I don't see maybe once a year. And so it's kind of all come together. My firm, our charity, our fundraising efforts, and then the friends that are around. My dad and my brother, it all happens right there as a confluence of all these parts of my life that have found its common center.
To the world of business. Every weekday at 5 p.m. Eastern Time, hosts Joe Matthew and Keely Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power live around the world starting Monday. Every weekday at 5 p.m. Eastern, only on Bloomberg Television. Context changes everything. In a multi-trillion-dollar industry, there's a lot of ground to cover.
We indeed have a rally.
We're talking a lot of dividends. We're talking income.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ. New time starts Monday.
Good morning, I'm Kriti Gupta in London, and this is The Pulse. The U.S. Congress has passed a temporary spending bill to avert a partial U.S. government shutdown this weekend. The legislation will be sent to the White House, where President Biden plans to sign it. The short-term package is meant to give lawmakers time to complete negotiations on annual funding for the fiscal year that began in October. And sticking with the states, the U.S. is preparing to introduce a plan to require banks tap the Fed's discount window at least once a year to ensure that lenders are ready for troubled times. Last year's regional banking crisis revealed that some weren't even set up operationally to quickly borrow from the facility. JP Morgan has raised CEO Jamie Dimon's pay to $36 million after reported the highest profit in the history of American banking. His total pay is up 4.3% from 2022 with a $1.5 million salary and the rest coming as performance-based incentives. JP Morgan revenue last year was just short of $50 billion. And from the banking space to the tech space, the EU antitrust regulator is expected to block Amazon's proposed $1.4 billion acquisition of Roomba maker iRobot. According to a Bloomberg source, e-commerce giant was told yesterday that the deal would likely be rejected. A final decision by EU leaders is due by February 14th, with the deal also likely to face opposition in the United States. Now, coming up on the program, shipping costs soar as Houthi attacks in the Red Sea threaten to cripple global trade. We're going to take a closer look at the events unfolding in the Middle East next. Stick with us. This is Bloomberg.
I used to have a data point I used to share that 75% of the people had never heard a phone ringing. Just think about it. I didn't say had never used a phone. They'd never heard it ringing. Today, 75% of the African people have a mobile phone. They use one. Okay? And we will do the same with the internet in the next 5 years. You know, we will do it as an industry, as entrepreneurs. All we need is the space, and we need investment support, because we are the best investment cases for this in the world.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Back in the driver's seat after TSMC's outlook drove a $165 billion global rally in chip stocks. Meanwhile, in the UK, recession risks grow as retail sales plummet in December, falling the most in 3 years. Traders adding to bets on a dovish BOE. Plus, it's the final day of the World Economic Forum. Stay tuned for a discussion on the global economic outlook featuring ECB President Christine Lagarde and German Finance Minister Christian Lindner, live at 10 a.m. London time. Good morning and welcome to The Pulse. I'm Kriti Gupta in London. Francine Lacqua is on location. A quick check on these markets here because, look, you are seeing a really interesting dynamic when you look at the Stock 600 in particular. You are seeing green on the screen across the continent, higher by 0.4%. The FTSE 100 outperforming those 0.7% there. Even across the Atlantic, futures seeing a massive bid. This is really just the read-through, the ripple effect of the massive tech rally you saw in the U.S. session yesterday. You saw in the Asian session, you were seeing it in the European session, and it is feeding right back into the U.S. session. Does that create some selling later in the European trade, though? That's going to be the question. Monetary policy also top of mind, which brings us to the cross-asset story. If you look at this yield picture, you're seeing a sustainable move about 4%, 4.13 on the 10-year yield at the moment, and it is staying there. A lot of those rate cut bets not showing up in the surface, and a lot of it has to do about geopolitical concerns, but also inflationary concerns as well. We'll dive into it in the hours to come. Plus, the currency pictures where the dislocations are really coming back down to earth. Euro-dollar 108, cable at about 127, and Brent crude, marginal moves there despite some of the geopolitical tensions, higher by 0.4%, been trading at a 79 handle. I want to dive in a little bit more to those geopolitical tensions in the Middle East and talk about a week that has been gripped by volatility and tension. I brought in two experts to help me dissect it all. Rosalind Matheson, Bloomberg's news director for the EMEA region, joins me right here on set. Plus Mark Champion, who covers international affairs for Bloomberg Opinion. We thank you both for so much for joining. Roz, I'm going to start with you here. When we talk about kind of what's gone on this week, President Joe Biden made some pretty controversial comments in the last 24 hours saying that the effectiveness of the U.S. and U.K. airstrikes on Yemen, well, they may actually not be as effective. Is that going to change their course of action? He says no. What do you initially make of that strategy?
Well, it's really just acknowledging the reality that for the U.S., they're kind of stuck because they are being doing these airstrikes on the Houthi targets in Yemen. Even so, the Houthis are still striking ships in the Red Sea, not damaging them severely, but enough to cause that continued disruption, forcing ships to go the long way round and really making life very difficult for shipping in the area. So for all these airstrikes, nothing really is changing, and real questions about how much, if at all, the U.S. has degraded the Houthi ability on the ground. So Joe Biden was really acknowledging reality when it comes to that. The question you say is, what else can the US do, or should they do here? Do they really want to end up with troops on the ground inside Yemen? Probably not. Not an election year for sure either way. And would that achieve anything in itself? And so what can the US do? More strikes on Yemen. Hopefully the Houthis at some point decide that they want to stop doing what they're doing. But really, there's no great answer here for the US and all of it.
You know, it's really interesting because it also comes at a time when the United States, under President Biden's direction, has removed the terrorist, or excuse me, or added, I should say, the terrorist organization status back to the Houthi rebels, which President Biden himself had actually initially taken away in 2021 for humanitarian aid, given that Yemen is still dealing with the civil war crisis there. Mark, I want to bring you in to this story because, as Roz put it, there is a big question about what the United States' role here is. And in the last 24 hours, when you look at these Houthi strikes, they've actively targeted U.S. commercial vessels, despite previously saying they're only targeting vessels headed to Israel. Is there a question here about effectiveness and credibility when it comes to the American military right now?
Well, I mean, the U.S. went in, without question, they knew that it would be very difficult, if not impossible, for them to quickly stop the Houthis from attacking international shipping. They went in because they felt they had no other option, that they had to show that there's a red line, that the U.S. still is committed to preserving freedom of international navigation. You know, this is not the only strait in the world that is of concern. Strait of Hormuz is even more important for energy, and you know, there's always an issue there as to whether Iran, which occasionally threatens to do so, you know, could shut that down. So this is a signaling exercise. But you know, it does put the U.S. in a very difficult position. Really, the strategy for the U.S. to get this done is to dial down the war in Gaza, because the Houthis say that they began this in order to get, you know, to end the war in Gaza. The U.S. is trying to get the Israelis to dial that war down, but you had Prime Minister Benjamin Netanyahu in Washington yesterday saying that he's not going to stop until it's finished, and rejecting outright the U.S. plan for trying to sort of dial down tensions in the Middle East by saying that he's not interested in any kind of Palestinian state.
What does that then mean in terms of who's really behind all of this? At the core, you are seeing Iran really fight multiple proxy battles, whether it's with the Houthi rebels, whether it's with Hezbollah, or various other organizations within even Iraq and Syria as well. I'm curious about whether that multi-pronged approach is actually effective from the Iranian point of view.
Well, it appears to be. You know, the Houthis are playing their role. They're clearly putting pressure on the international economy, putting pressure on the U.S. You know, in Israel, you have, you know, Hamas. There's no we don't know that the Iranians began this as a kind of careful plot. But what they are doing is taking they're opportunists, and they're taking you know, the opportunity to put pressure on Israel, on the U.S. You know, through Hamas, through Hezbollah, through their militias in Syria, their proxies in Syria and Iraq. So that, you know, this is a kind of multi-pronged attack. That's how the Israelis certainly see it, and the Israelis. It's one reason why the Israelis are being so intransigent.
Roz, I want to bring you back in here because as we talk about how the West perhaps deals with these constant threats from Iran and their proxies, there's been a lot of rhetoric around adding even more sanctions, pressuring even more oil revenues. Is that realistic right now?
Well, in this environment, it's sort of interesting to see what, if anything, that would achieve. I mean, you talked about also Joe Biden reinstituting the terrorist designation on the Houthis, perhaps to try and cut off some of their financing. But in the end, really, tangibly, what is that going to achieve in the short term, if anything? And so there's lots of talk about penalties and using economic pressure to force nations and groups to change course. But history shows us that's often a tricky calculation to take. And do the results actually actually deliver what you're seeking at the time. I mean, look at the amount of sanctions on Russia over its invasion of Ukraine, for example. Those were designed to squeeze the Russian economy, to squeeze Vladimir Putin, to make him change course in Ukraine. And we're coming up, to the war's about to enter its third year. And certainly it's not stopped him. He's cranked up a war economy in Russia instead. And Ukraine is struggling on the ground with its conflict. And so these questions of sort of using, oil and so on as a weapon against Iran. I mean, Iran always wants to be able to ship more oil. It's certainly one thing that's important to it. But is it going to deter Iran with these proxies at this point? It's hard to see how.
It really adds up the pressure that this needs to be a conversation and a crisis that needs to be wrapped up even more quickly, despite the regional escalation you're already seeing. Mark, I want to bring you back in for the final word here, because just in this last week, Arab nations, a lot of Gulf states in particular, have said they together are going to be leading perhaps the brokering of some sort of peace plan to end the conflict between Israel and Hamas at the moment. What is the reality of that? Do you think that's achievable?
I think it's going to be very difficult because the sine qua non that they say is required for them to get involved, significantly and really play a big role, is that the Israelis should accept that they're, sort of restart the process, the talks leading towards a Palestinian state, a two-state solution, with the Israelis at the moment just ruling that out. And saying that they intend to maintain control all the way from the border with Jordan to the sea. That's what Netanyahu said yesterday. It's hard to see how you get those two kind of sides to meet.
And it's something, it's a kind of a hard line that they've been sticking to, I want to say, for decades to come, and yet really reinforcing that narrative now. Mark Champion, Rosalind Matheson, we have to leave it there. We thank you so much for putting this week's event into context. Of course, Rosalind Matheson, Bloomberg News' EMEA Director of News, and Mark Champion covering international affairs for Bloomberg Opinion. Coming up on the program, we go from the Middle East to right back here in the UK. We're going to hear from the UK's Chancellor of the Exchequer on tax cuts, Google, and this year's looming general election. That conversation next. This is Bloomberg.
There's much oil to be found in the lower 48 at this point, or even in, let's say, Alaska as well, or mostly we know where all the oil is, and there's no more big Permian Basin kind of deposits anywhere.
People have said that over time, and then we've always been surprised. And so the U.S. has been explored more than any other place in the world. I think the industry has a good idea, but technology allows you sometimes to recover things that you haven't been able to before. That's the story of shale. The other one that continues to be a positive story is deepwater Gulf of Mexico, where we'll go out and drill in a mile or more of water depth and then go down several more miles and find large fields. And the Gulf of Mexico is still relatively underexplored compared to the onshore. So I think there's still room for more discoveries.
UK Chancellor Jeremy Hunt says he wants to make Britain more competitive. He spoke to Bloomberg's Francine Lacqua at the World Economic Forum in Davos.
Well, I think when investors look around the world at the instability in other countries, the rise of populist far-right parties in many parts of Europe, they say that even with elections, which is right we have because we're a democracy, the UK is actually a very stable long-term bet. And what they're also seeing is something they haven't seen before, which is that the technology sector is now so vibrant in the UK that they can't really afford not to be there.
Will you tell actually investors that we'll see a corporation tax cut?
Well, they've already seen a huge corporation tax cut because in the autumn statement I introduced full expensing of capital allowances, which means for investors investing capital, they get a 25% discount off their corporation tax bill, which is more attractive than any other major country. So we will continue to do everything we can to get the tax burden down. And that is, a choice we have as a country because other parties would increase the tax burden, they'd increase borrowing. We think the way we grow the economy is by reducing taxes, making them more competitive.
But will that happen in the next budget statement? And is that going to be the last financial event before the election? Well,
Fran, it's early days for the budget. It's on March the 6th. I haven't seen the final figures from the Office for Budget Responsibility, so I don't know the headroom that I'm going to have to play with. But what I can tell you is what I want to do, because I look around the world and I see that North America, Asia, where generally countries have lower taxes than Europe, they're growing faster. In Europe, where our taxes tend to be higher, we're growing more slowly. So if I can, I want to reduce the tax burden and make the UK more competitive, more dynamic, more vibrant.
Will you deliver an autumn statement, or will we have an election before then?
Well, the timing of the election, I wish I could tell you, and it's not that I'm hiding, I just don't know. This is a decision for the Prime Minister. What I have to do as Chancellor is make sure that I set the economy on the right track, because the main reason people vote Conservative is because they trust us with the economy, and they can look at Rishi Sunak's record, my record. They can see we brought inflation down from 11.1% to 4%. So far we've avoided a recession, even though many people predicted we'd get one, and they can see tremendous prospects for the future.
UK Chancellor Jeremy Hunt there, speaking to Bloomberg's Francine Lacqua at the World Economic Forum in Davos, Switzerland. I want to get a little bit more context on some of what they were talking about. Dan Hansen from our Bloomberg Economics team joins me right here on the set. Dan, they were talking a little bit about this fiscal budget and whether or not tax cuts are really reasonable or on the agenda. Certainly desirable by members of government, but also for the likes of you and me. We all love a little extra money in our pockets. But how realistic is that? Can they afford to do that?
I think they probably can, to be honest. So if you go back to the autumn statement, he had about, and we call it headroom here in the UK, which is the space he has against his fiscal target. So he had about £13 billion of headroom. But since then, we've had this big fall in interest rates, in gilt yields, and a few other moving parts. But I think his headroom could possibly double. So he could have close to £30 billion to spend. Now, just to put it into context, an income tax cut, 1p on the basic rate of income tax here in the UK, which is 20%, would cost him about £7 billion. It's probably going to keep fuel duty frozen again. And I think, so to answer your question directly, yes, I think there is a fiscal boost coming, and he'll probably have the headroom to do that, mainly driven by this fall in interest rates we've had, which is going to benefit the public finances.
But are there other expenses that aren't being accounted for here? And specifically in the context of geopolitics, for example, we've heard Rishi Sunak, for example, US and the UK talking about these airstrikes in Yemen. I imagine that's going to cost the UK a little extra money. And we've heard Rishi Sunak talk about the defense budget in this country in particular. Is that accounted for?
It will be accounted for, but I think what's really interesting about the fiscal strategy of this government, at least, is to, as we sort of answered in the first question, is put so much emphasis on tax cuts in order to bring borrowing down, which is what you've heard the Chancellor say there, to bring debt down and bring it back to more sustainable levels. That means an enormous squeeze on public spending. So I think the question when we see the budget and when we potentially see these new tax cuts is to ask, is it really realistic to expect spending to be squeezed that hard when we've had such a long period of austerity in the UK between 2010 and 2019? So there is always going to be this question hanging around sort of long-term sustainability of the public finances the more you go and cut these taxes.
So we talked a little bit about the fiscal policy. Let's talk about the monetary policy as well. Just in the last 24 hours, a lot of bets being added on the BOE to be even more dovish than they were expected to before. How many rate cuts do you think is accurate for the BOE in 2024?
Yeah, so we've had a bit of a roller coaster, haven't we? So we had CPI on Wednesday, which saw bets being paired quite significantly. I think 25 basis points was taken out of the curve for 2024. So we went from about 130 for the year down to 100. We're now back, I think, around about 120, a little bit less maybe. Our view is that there'll be 5 this year, 25 basis points. So that's 25 basis point cuts. That's probably on the aggressive side for economist consensus, at least the economist consensus. But I think the thing to sort of remember here is that there's pretty strong evidence, at least we think, that inflation will be around 2% come the spring. That opens the door to the bank to think about cutting rates. And when it does start cutting rates, our view is they'll probably go at one a meeting instead of one a quarter. It seems quite strange to miss a meeting, cut again. So I think for us at least, we're penciling 125 at the moment, so 5 for next year, 5 for this year. All
right, so the call there from Bloomberg Economics, Dan Hansen joining me to talk a little bit about the money issues of the UK. We go from the finances of the United Kingdom to the finances of Germany. German budget lawmakers have approved the federal government's delayed finance plan for 2024, which restores a constitutional limit on net new borrowing for the first time since 2019. Joining me now, Bloomberg's Oliver Crook is all over this story. Ollie, is it over yet?
Well, almost, but not quite. And what the it is also the question here. So basically, they've got this through the Budget Committee. It now needs to go to Parliament in order to get fully ratified. That'll happen in the beginning of February. So what we got overnight was the net new borrowing figure that is close to 40 billion euros. And of course, this is the sort of big debate here within Germany because there is not enough money to go around anymore. And so, for example, one of the things they're setting up is a raw material fund for €1 billion. That money has to come from somewhere. And part of the places it's come from has caused some of the political problem that we've seen in Germany over the last week. We've seen those farmer protests all across Germany. It all crescendoed on Monday with more than 5,000 tractors, 10,000 people in the street. We've had the train workers also striking. You also have the truckers that are doing a protest today here in Germany. So again, all of this stuff is where the rubber hits the road, where you need to make the exchange and the balance of really retooling this economy for the future.
So talk to us then a little bit about any optimism here. Ollie, we're in the news business. We need some good news every now and then. Talk to us about if there's any reason to be positive.
Listen, Kriti, I was looking for good news in the economic data, some of the surveys, but really overall, there isn't a huge amount of it. We got the data out this week that the German economy contracted last year. It's not looking really very much better this year. The question is, how do you solve that problem here in Germany when you are cash strapped? So we asked that to Christian Lindner, the finance minister over in Davos, what his recipe is for success in the German economy is, and he basically really favors supply side reform. You know, he's a libertarian economically. That means a more flexible labor market, a labor market which is missing people, lower taxes. We now have higher taxes due to this sort of a budget situation. And then the other thing that he would really like is to the sort of white whale of German economic reform, which is cutting red tape and bureaucracy. But in the absence of being able to do those things, there's another issue this government needs to deal with, and that is the rise politically on the far right. And we asked Christian Lindner about that.
They have very easy answers for very complicated challenges. Think about the Brexit. And the situation is similar in Germany. Our right-wing populists, they suggest Germany would benefit from exiting the European Union, but the single market is of paramount importance for our economy.
So really the task for the government is convincing the people to kind of stay along with them as they make these really difficult reforms. Among a really dimming economic outlook, you may get a contraction. Germany is going to be the slowest growing nation of the G20, except for Argentina this year. So while the outlook may not be clear, one thing is for sure, it's going to be tough economically and it's going to be tough politically.
Certainly something we're going to be keeping a very close eye on. Bloomberg's Oliver Crook reporting for us from Berlin. We thank you as always. Coming up on the program, the CEO of Morgan Stanley gives us his outlook for Fed rate cuts as this year's World Economic Forum in Davos begins to wrap up for another year. That conversation next. This is Bloomberg.
think this will probably go down in history as one of, if not the largest financial crime ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some point that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
So, Mark.
Are you in? I'm in.
I'm in.
We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Morgan Stanley CEO says the drought in mergers and acquisitions should ease once the Federal Reserve begins to lower borrowing costs with some level of predictability. Ted Pick speaking to Bloomberg in Davos.
I think the path is probably that inflation is past. They're going to start lowering at some point when they're ready. They're going to be prudent. They're going to be thoughtful. And that kind of predictability is very good for the core investment banking business.
Morgan Stanley CEO Ted Pick there speaking to Bloomberg in Davos. He's not the only one who joined us. Blackstone CEO Steve Schwartzman saying he's optimistic that animal spirits are returning to markets on hopes that the Fed will also be slashing interest rates this year. Speaking in Davos, he told us the pace of private equity investments is picking up at the world's biggest alternative asset manager.
The economy is slowing a bit. That's normal with high interest rates. So on the other side of the ledger, the expectation that interest rates are going down is creating animal spirits again.
Blackstone CEO Steve Schwartzman there. You've heard from some of the major kind of market players. You're also about to hear from some of the major monetary and fiscal policy players as well. Coming up next, a discussion on the global economic outlook. Panelists including ECB President Christine Lagarde and German Finance Minister Christian Lindner. That panel hosted by our very own Francine Lacqua in just a few minutes' time. Stick with us. This is Bloomberg.
operating in a very volatile environment. So JetBlue has a very large presence here in New York, and there are air traffic control challenges. And so we've had to overinvest in hiring excess crew members and building flexibility into our planning process. And so over time, we hope to wean some of those investments back as the operating environment around us stabilizes.
We made the decision early on that we were only going to invest internally on key differentiating technologies, and clearly the powertrain is the key differentiating technology. So our investment is a recurring investment with respect to the powertrain team, the battery team, which is part of it, the engine team, the electric engine team, which is part of it. And we also have a lot of non-recurring costs with the other components because we're not developing those internally. We're using the existing aerospace defense supplier base for most of the other components.
We invest a lot in the offices, that you feel home, that you can actually be at your best yourself, and people work very differently. We take a lot of input from the sports world, actually, the athlete spirit, right? Building a sports team that can perform at the best, but also talking a lot about the explorer spirit. How can we really tap into new things, continue being disruptive? We have 80 different nationalities at On. It's very important to have a diverse team because we have a very diverse landscape of customers.
Top names in climate finance are on Bloomberg.
I can't tell whether you're optimistic or pessimistic about climate finance.
A lot of great stuff is happening, but is it enough? No, it's not enough.
I'm biased. I'm a huge investor in both fission and fusion, and hoping that it comes in time.
Transition is not going to be an event. It's a process.
But at the end of the day, it's the right thing for the planet, it's the right thing for the industry, and there is business opportunity.
This is Bloomberg.
Good morning. This is special coverage of the World Economic Forum's annual meeting in Davos. I'm Danny Berger in London, but you are now looking at a shot at a snowy Davos, Switzerland, as a week-long gathering wraps up. Now, in just a few moments, Bloomberg's Francine Lacroix is moderating a panel on the global economic outlook. It wraps up the week-long gathering about restoring trust. Panelists there include ECB's Christine Lagarde, the WTO Director General, Singapore's President, the finance ministers of Saudi Arabia and Germany, and Carlisle's David Rubenstein. Now, that is set to start in just a few moments, and we will bring it to you as soon as that happens. But beforehand, let's take a quick check on these markets, because it has been a good day for risk. Over the past 24 hours, NASDAQ hits a new high. The futures market continues to tread higher. It's all thanks to TSMC. $160 billion was added on to the market cap of chip makers yesterday, thanks to TSMC, who said they're going to be spending more and their revenue outlook is brighter. S&P 500 is now just 0.5% away from an all-time high. And at the same time, it does look like the rest of equity markets are so-so. Not awful, but not great. So it really is about tech. Here you have your cross-asset picture. 10-year yields, those also struggled over the past 24 hours. Yes, we are buying ever so slightly today, but yields are at a one-month high. The data has been surprising to the upside. Initial jobless claims fell to the lowest level yesterday since 2022. It is that double whammy of Fed speak, and at the same time, you also have, again, Fed speakers saying we are pushing back. Bostic was yesterday. Sterling, that's tumbling. UK retail sales fell at the fastest pace since the COVID lockdown. Traders then added to their wagers on BOE rate cuts. 114 basis points is what's priced in this year. Finally, Brent crude, some slight upside for oil, yet another attack from Houthi rebels on commercial shipping, and then yet again another U.S. response. It's trading at year-to-date highs, but maybe is somewhat capped to the upside because of the abundant supply in this market. Now let's talk again about what's happening at Davos, because there's been some extremely important conversations, including banking executives who seemed cautiously upbeat.
I must say, 2024 is starting off from a banking perspective quite well.
We feel quite strong in 2024 as all of those investments are going to deliver for us later. But the direction of travel is the same. Clients are still there.
We're cautious because the economy is slowing down. The regulatory environment's really uncertain in the U.S. The rules around liquidity, the rules around capital, the Basel III endgame. 20% increase our capital doesn't seem to make sense.
Regulators are looking in the wrong place, looking to over-regulate the banks.
It's going to be a bumpy year, but more than anything else, we've got to be resilient.
We've got to be prepared to react to news.
I'm very much concerned about the small and mid-sized banks. They've got several risks happening at this point in time.
There's always concerns, but today the regional banks are stronger.
One bank that had an extremely positive year was JP Morgan, which just increased Jamie Dimon's pay to $36 million. Joining us now is Bloomberg's Charlie Wells. Charlie, I mean, you'd assume maybe you'd get paid better if you're the best performing bank on Wall Street.
Yeah, that's right. I mean, they brought in $50 billion last year. And look, the board was really happy with Jamie Dimon. I actually printed out a little statement, a filing that they made yesterday.
How can you read that? The text is so tiny.
It's tiny. The board continues to recognize that the firm is in a uniquely fortunate position to be led by such a highly talented and experienced executive who continues to grow the company. So very positive.
There you go. Very positive indeed. Charlie, thank you so much for joining us on that. All right, let's now get back over to Davos, to the global economic outlook. Francine Lockwood there speaking to the panelists.
China and the deepening rivalry between Washington and Beijing, which is really forcing companies also to rethink supply chains and security. Now, despite these pain points, the post-pandemic global recovery has actually managed to roll on. In the U.S., consumers defied expectations and kept spending, prompting many economists to ditch their downside scenarios and forecasts on a rare soft landing. In China, the booming electric vehicle industry, along with a healthy dose of fiscal stimulus, helped leaders stick close to their growth targets. And the world's economy, Great New Hope India, also took up some of the slack. But overall, according to the World Bank, the global economy is dragging along at growth rates slower than previous decades. And this is as the post-pandemic rebound is weighing down by high interest rates. So we're looking at sluggish trade, geopolitical tensions that will hit developing countries hardest. So without giving you a pessimist guide to 2024, we want to look at some of the main pressure points, some of the growth foundations for the future. And of course, there are many elections and expectations on a future trajectory. For your social media, you can also do hashtag WEF24. So this is our all-star panel. Christine Lagarde, President of the European Central Bank. Christian Lindner, Federal Minister of Finance of Germany. Mohamed El Jaddan, Minister of Finance of Saudi Arabia. President Tharman Shanmugatam, the President of Singapore. Dr. Ngozi Okonjo-Iweala, Director General of the World Trade Organization. And David Rubenstein, co-founder and co-chairman of Carlyle. So thank you all for joining us. Mr. President, let me start off with you. 2023 really surprised expectations to the upside. Is the global economy really now as resilient as we think?
Well, it's we have to think about it not on a year-to-year basis, because the largest challenges to resilience that we face are what's creeping beneath. It's the slow-moving changes that threaten us in a far more fundamental way in the years to come. We know what they are. We know what's happening in the shift in the global ecological balance. We know what's happening in terms of the aging of societies, which we are by and large not prepared for. We know what's happening in the gradual drift towards polarization. These are the real threats to resilience and to human security. And I'm not even talking about the wars, including the stupid wars that we see.
Thank you so much. Madame Lagarde, can you talk to us about what you saw in 2023 that gives you hope for economies in the future?
Well, good morning to everyone first, and thank you for having me on the panel, because I'm a strange panelist, actually, because I cannot talk about the things that I spend 100% of my time on. I'm a central bank president for the European Central Bank. We have a monetary policy meeting coming up on Wednesday and Thursday, and during 1 week before that, I cannot talk about what I do, what I hope for, what the analysis supporting our conclusions is. So, I thought long and hard. And I tried to identify a few of the trends that we have seen in 23 that will have no impact on our decision next week, and what we should sort of anticipate for the future. And I came around to something that I called normalization. That's what we are beginning to see, especially in the end of 23, but towards something that is not going to be normality. So from normalization to non-normality. So what do I mean by that? The period before 23 was strange, extraordinary, difficult to analyze by many accounts. And 23, we have seen the beginning of normalization. When you look at consumption, for instance, around the world, I'm not talking just about the euro area, consumption is still a driving force for growth, but the tailwind that we had the benefit of are gradually fading. This very strange, extremely tight labor market, still tight, but a little less, and some of the indices that we use to identify the relationship, particularly between vacancies and unemployment, are changing gradually. So less tightness on the job market. When we look at savings around the world, there was plenty of it. Excess saving, with that excess saving, pretty much in all advanced economies in particular, is coming down, and from this 10% excess saving, we're getting close to virtually zero. So if you combine these two, job less tight, savings diminishing, clearly consumption is not as strong a force as it used to be. That's one thing. The second thing, which is also beginning to normalize, and I hope Ngozi will talk a lot about that, is trade. Trade went down and was massively disrupted by this goods versus services versus good over the course of the last 2 years preceding 23. But it is beginning now to really pick up. And in October, we had global trade numbers that for the first time in many months was up. And the pattern of trade is changing, but I will leave it to my friend Ngozi to describe that better. And the third normalization, and I have to say that, is that around the world, not including the euro area, around the world, inflation is coming down. And we have seen it yet again in November, both headline inflation and core inflation. So that's what I call the normalization that we have observed in 23. And maybe you'll give me the floor another time to talk about how it is not normality that we're heading to.
We'll certainly will talk about that. Dr. Ngozi, could you talk to us a bit about the resilience that you've seen in global supply chains and trade?
Well, thank you. I think Christine has set me up nicely. Let's see if I can move on that. It is true that in 2023, trade was considerably down. Actually, goods trade, we had to revise our forecast down from 1.7% for the year to 0.8%. In the last quarter, as you said, we saw an uptick in the numbers, and trade showed a recovery led by automobiles and components and parts. But all in all, when we look at the first 3 quarters and the last quarter, we still think we'll come in at about the number we projected or slightly less than that. We had been more optimistic about 2024, and we were forecasting a considerable recovery to 3.3%. So, like Christine said, maybe moving towards normalization, or how you put it, but not normal. Because trade growth is still below trend, is still trending below GDP growth. But the problem that I have is the geopolitical conflicts that we now see, the problem in the Red Sea and the Suez Canal. We also have problems in the Panama Canal because of climate change. There are so many uncertainties, and of course all the elections that we see around the world and what that may bring. I think there are a lot of uncertainties that make forecasting difficult. However, I'll take a bit of a risk and say I think it will be better than 2023, coming at 3.3%, below that, but much better than what we saw in 2023, unless a major war breaks out. Then all bets are off.
Thank you, Dr. Ngozi. Minister Lindner, Germany has prospered in parts for many years from buying energy from Russia and selling cars to China. All of that is changing also because China is making so many EVs. How do you marry the two?
Well, given the historic shocks we have seen the last years, the global economy has shown remarkable resilience, and the German economy has shown resilience as well. Think about the energy situation you have mentioned. We had to reinvent the German energy infrastructure and supply in the last 18 months. And so we have not the growth perspective we are expecting, but our economy has shown this resilience. Looking to what will come over the next years, Christine said, okay, we are in the process of normalization. I would say we are witnessing a new normal, and 2023 marks this new normal. Think about the rise of artificial intelligence we all have discussing here in Davos. Think about the geopolitical tension and the threat of fragmentation we will have to deal with over the next years. The higher debt levels after the pandemic and the energy price hikes, which has shrunk our fiscal space to finance transformation. And given the very little growth perspective of the global economy, we have to answer the question how we will be able in the future to finance transition by the private capital markets and how to fight poverty around the world. So for me, it's not normalization, it is a new normal which we have to be prepared for. And has 2023 given me hope, you asked? I would put it this way, it was a call for action, because we have to rearrange some policies, and probably we see a new need for structural reforms. Probably we are at the beginning of an era of new structural reforms.
Minister Al-Jadaan, what do you see as the main risks, compared to maybe the resilience that we saw last year?
There are a few things. I think I would just put, possibly from what I've heard, a little bit of context. I think obviously there are the immediate risks that will be obvious, which is geopolitics, fragmentation, and obviously the debt situation, particularly in low-income countries. And we are talking about them, and we realize that they actually pose risks, but that will add to inflation and monetary tightening. But these are the immediate ones. We need to attend to them. But then I think we need to make sure that we also attend to the medium term. I mean, the projections that we have seen from the World Bank or the IMF clearly suggest that this decade would be the lowest growth potential for the world economy compared to the first decade of this century and the second decade. And yesterday, Ajay Banga said in one of the panels a very nice statement. I will quote him. He said, "These are projections, they are not our destiny. And therefore, we should actually see what can we do to form our destiny by actually changing the way we do things, by adopting policies that will actually fuel growth." These are very important, and again, in relation to low-income countries. Low-income countries are actually coming under a serious crunch of debt, and for them to be able to grow, they need to invest. And for them to invest, we need to restructure their debt and allow them access to money that they can then fuel their own growth, which will help the rest of the world.
Thank you so much. David Rubenstein, what do you worry about the most in 2024? There are many things to worry about.
Well, I worry about everything, but I would say the most important thing I wanted to convey is that predictions made in January about what's going to happen in the remainder of the year is generally wrong. Last year at this time, here and other forums around the world, people were predicting the U.S. would likely have a hard landing, if not a hard landing, a soft landing, but a soft landing implies very low growth. As it turns out, while the numbers aren't really in yet, the U.S. will have grown probably around 2.5% for 2023, which is much better than anybody really projected at the time. The U.S. has its challenges for sure, but inflation is coming down. And as a result of that, the Federal Reserve is likely to reduce interest rates relatively in the near future. In our country, we have a presidential election. I think everybody probably recognizes that. And as a result, The Federal Reserve wants to get its, wants to get its rate cuts out of the way before the presidential election is in full steam. Because if you have rate cuts right before a presidential election, it will be seen as helping the candidate who's in the White House, because it'll gin up the economy, is the theory. And so the Republican nominee would not be happy with that. So the Fed is going to get 3 rate cuts in or more this year, as I expect it will. It will have to get those done relatively in the first quarter, certainly in the first half. So you can expect to see rate cuts. And that will probably drive the U.S. economy. During presidential election years, the U.S. economy generally does pretty well. We tend not to be in recessions in presidential election years because Congress spends a lot of money, and the Fed tends to be relatively easy on monetary policy during presidential election years. The biggest risk for the U.S. economy is the usual risk that everybody has. Are we going to be in a war somewhere, something like that? Is there going to be another pandemic? But it's really like we look in the mirror and the enemy is us, because the biggest risk we really have is the dysfunction of the U.S. government, our inability to pass appropriation bills that fund the government on time, the inability to deal with the debt limit issues on time. Those are the biggest things that worry me, whether at some point the U.S. government just can't get these issues done because of the political problems we have in the country. And as a result, I worry more about that than other things in terms of the U.S. economy going forward. We will have a presidential election year, and almost everything every candidate will say will probably not be true about what will happen in the future, because they probably won't be able to get done what they say they're going to get done, but it'll be interesting to watch.
But David, a number of leaders have expressed concern of what Donald Trump in the White House means for fragmentation, for foreign policy. Right. Is there any way that the rest of the world can Trump-proof their economies?
If somebody has a way to do that, I think they should patent it and probably sell it to somebody else. But it's be very difficult to do. Clearly, the biggest political change that occurred in the United States last year also was unpredictable, or unpredicted, I should say. I don't think anybody outside of the Trump family would have predicted that Donald Trump would be indicted 4 times, 91 counts on various indictments, and that his popularity would soar to the point where he has a reasonably good chance of locking up the Republican nomination by March, which is earlier than almost any contested presidential candidate has been able to lock up the Republican nomination. If he is nominated, it'd be the first time ever that a Republican Party has nominated the same person 3 times in a row. He clearly has a following that many of the analysts missed, and I don't think any of the court cases are likely to change his momentum. So I think people should recognize that he's a serious political force and should not discount the fact that he could well be elected again, despite the fact that many people in Europe, where we are now, are not really his biggest fans. And so I wouldn't rule out his possibly getting elected again. Joe Biden shouldn't be discounted. Obviously, we have 2 older candidates. People have suggested to me that I should run for president, but I say I'm only 74 and you need to be older to run. So, but I do think, to be very serious, it'll be a relatively close election. And the final comment is, in our country, in the last 2 presidential elections, 45 states out of the 50 voted exactly the same way in each of those 2 elections. Only 5 states voted differently. Those 5 states are Arizona, Georgia, Minnesota, Michigan, Pennsylvania, and Wisconsin. Those 5 states are the only ones that voted differently in those 2 elections. Right now, Donald Trump is ahead in all 5 of those states. He lost all 5 of those states last time. Hillary Clinton lost those 5 states as well. Biden won them last time. So everything will get down to those 5 states. And right now, if the election were held today, it would be difficult to see how Trump would lose that election today. But it's a long way away. And the most important thing you can say about presidential elections in our country is things change all the time. And we won't know for sure probably until about a month before the election where it's really going to go.
So, Minister Lindner, how should Europe prepare? And again, how difficult is it as a finance minister to look at models? This is for Minister Lindner. How difficult is it to look at models, to forecast, given all the crises, given the elections, and actually you don't really know what you're left with in 12 months?
Well, I think we are talking too much about Donald Trump in Europe, and we should prepare ourselves for a possible second term for Donald Trump by fostering our European competitiveness. doing our homework is the best preparation for a possible second term of Donald Trump, and this includes our capabilities to defend ourselves, being an attractive partner on eye level when it comes to the economic situation and when it comes to a fair burden sharing under the roof of NATO is the best we can do to be in a good partnership with the United States. And then it doesn't matter which administration, if we are attractive, if we do not have to ask others because we have capabilities ourselves, it's the best way to cooperate. And this is completely for both possible outcomes of the election in the United States, doing our homework.
Madame Lagarde?
I'd love to follow up on what Christian is saying. I think the best defense, if that's the way we want to look at it, is attack. And to attack properly, you need to be strong at home. So being strong means having a strong, deep market, having a real single market, and we should be expecting some suggestions by Enrico Letta, former Prime Minister of Italy, who is in charge of producing this report on how we can deepen and improve the functioning of that single market, which is a huge economic zone in the world, but which is not completely a single market yet, as many CEOs, I'm sure, experience on a daily basis. And we should, more importantly, make sure that the money that is saved in Europe, or the money that is associated with pension, is actually invested in a capital market union that actually functions efficiently to rally the investment that we badly need for the transition towards a greener economy, which relies certainly for a period of time on fossil fuel, but less so, as was indicated in the last COP28, and moves towards renewable, where investment is badly needed.
May I add just one little aspect, because I'm grateful that Christine has mentioned the Capital Markets Union. I'm concerned that some policymakers in the European Union tend to follow the United States to subsidize almost everything. But we have to avoid a subsidy race we cannot afford. I'm curious if the next US administration can continue the way they support the economy. I wonder if it's sustainable to pay so high subsidies. But what we have to do is to improve our framework conditions for our economies and to make further progress in Capital Markets Union. Our competitive disadvantage compared to the US is not subsidies, it's the function of our private capital market.
Mr. President, Singapore is, of course, a country that does well when the world is working well together, less well when China and the U.S. are falling apart. So what's your take on this U.S.-China stress?
Well, I think the US-China relationship is the central axis of tension when you look at the largest problems we face in the world. And it has to be refashioned into the central axis of partnership. They look at each other fundamentally as adversaries, and then they look for opportunities to cooperate within that framework. It has to be flipped around. Fundamentally, they have to be partners, because the challenges that they both face are the same. Climate change, a lack of global order, a breaking up of the global trading system. They're challenges that both of them face, and both of them will suffer for it. And the two are absolutely essential to any solution to climate, to peace, and to an open global trading system. And then within that, you can argue, you can badger, you can ensure fair competition, you can ensure that there's a way of dealing with each other that's consistent with the principles of openness and fair play. But we've got to flip things around, where you're not fundamentally adversaries, to one where you're fundamentally partners, and then you argue about specifics. That's the fundamental repositioning that's required. So it's not just about a pause in the relationship, it's really about a repositioning in the relationship.
Dr. Ngozi, if we move it forward, there are 3-4 pillars that we need to put in place to foster growth. And I don't know whether this year there will be a lot of distractions that keep us further away from that goal, but what would you focus on to bring back longer sustainable growth?
Well, thank you. And I just want to say that I strongly support what Christian and Christine said. I think the best way to be prepared in the for any eventuality is to focus on those things you need to do anyway. For me at the WTO, I don't fret about who is going to come or what is happening. Maybe that's an overstatement. But in a way, it's focusing on what do we need to do to strengthen and reform the organization so that whatever the circumstance, it will be able to deliver what it's supposed to deliver for people. So if we keep doing that, I think that's a strong answer, a bit of offense in that regard. But with respect to what are the pillars we should look at for restoring growth, I think that's a very good conversation because we focus a lot on the pessimistic things that might happen. But there are some bright shoots that I want to talk about on the trade side. First, I want to mention that in spite of all the uncertainties that we talk about and I pointed to in the beginning, trade has been largely resilient. It is because of trade that Europe was able to find other sources of energy from the US and the Gulf and elsewhere to make up for the withdrawal of energy from Russia. It's because of trade that 35 countries dependent on the Black Sea region from Africa were able to find alternative sources of grain fertilizer. So trade has been a force for resilience. And there are some bright spots in trade that we need to be conscious of. There's digital trade and services trade is growing fast, especially digitally delivered services trade, growing at 8% per annum. And that is a very, very interesting thing because now we're all talking of digital platforms, AI, and this is a positive sign. And we should be preparing ourselves to say, how do we support such trade? How do we make sure that it benefits small and medium enterprises, women, those at the margin? Green trade has tripled from 2000 to now, tripled in value to $1.9 trillion. That's another opportunity. And finally, I want to say that the reshaping of supply chains, I see that as an opportunity and not a challenge. And when you see it as an opportunity, it could help us look at other sources of growth. If you take just one supply chain that we talked about here, the critical minerals and critical raw material supply chain, we have the possibility that these critical raw materials are found in many developing countries who did not benefit as much from the first phase of integration into the global economy. There is now a chance to bring them in through developing these supply chains in place because they have two advantages, not only the raw materials, but also green energy. So combining those two, and I'm glad to say that Chancellor Schultz and Europe has caught on to this, you can go to Africa or Latin America and develop these supply chains, bring in new sources of growth, create new employment, lift people up from poverty in these countries. So those are some good opportunities that are out there, some hope.
David?
On trade, whoever is elected president is not likely to enter into a lot of trade agreements. The word trade in the United States or trade agreements is almost a curse word now. Somebody is in the audience here, Mike Froman, who negotiated the TPP agreement under President Obama. That couldn't even get a vote in the United States Congress, and I don't think any major trade agreement could be approved by our current Congress, and I don't think it's going to change for a while, no matter who the president is, unfortunately, because trade is often seen by certain constituencies in the United States as favoring jobs offshore and not really not popular at all. Even Hillary Clinton, when she was running for president, was against the TPP, even though it had been negotiated by a Democratic administration in which she had served. On U.S.-China is the most important bilateral relationship in the world. There's no doubt about it. But there is no political benefit in the United States about saying anything beneficial or good about China or in a presidential election year. So President Biden and President Trump, I don't think, or either one are going to say we need to have closer ties with China, and I'm going to be nicer to China than I was before. It's just not going to happen during a presidential election year. Hopefully, after the election's over, the progress that's been made recently at the APEC meeting can see something blossom, but I don't think you'll see anything blossom before then, though hopefully the Chinese will provide some pandas again to the United States, which we desperately would like to have.
Minister Al-Judan, what are some of the policies that you think we need to put in place now to make sure that there's success in 4 or 5 years that we're maybe not thinking about as much as we should?
First of all, I would like just to follow up on this. I was talking to a U.S. friend yesterday about almost the same subject, and I asked him whether he is optimistic, and he said, well, at least it is only 4 years, and someone else will come. So it would be interesting to see what is going to happen in the next 4 years. But more seriously, I think what needs to be done is looking at how can you actually mobilize your own resources? How can you do structural reform? I can tell you from experience, and I'm not here really to promote what Saudi is doing, but from experience, what we have done in the last 7 years actually helped us significantly in our resilience to deal with the multiple shocks that we are facing, including what the current situation, geopolitical tension. So structural reforms are critically important. Local revenue mobilization is actually very important for countries, and obviously the support of multilateral development institutions to catalyze private sector investments in developing nations, and particularly low-income countries, is very critical. Catalyzing that is, I think, will be, and I'm actually very optimistic with the reform that the World Bank is doing, and actually bringing MEGA, IFC, and their own IBRD and IDA together to make sure that they provide that support and catalyze more private investments in low-income countries. I think this is promising, and I would love to see some results actually this year.
Mr. President, you worry about something that we're not really talking about, and this is fiscal spending. Are we sowing now the seeds to have an even bigger crisis 4, 5, 6 years from now?
Well, I think the most important and most neglected area of public policy is fiscal reform. Christian spoke about the already very high debt levels, so we're starting in the wrong place, and we're going to have to address challenges in the future that are going to have to require more fiscal investments. We're neglecting the issues because it's never pleasant to talk about raising revenues or raising taxes. It's never pleasant to talk about redirecting subsidies or redirecting spending. So we're just merrily gliding into the future, tinkering at the edges. And even the most major international tax reform of recent years through the G20 was really about something very small to do with corporate taxes and rearranging and reallocating corporate taxes. It's a very small issue compared to the challenges we really face. The big issues are, how do we address the climate transition? How do we address the needs of aging societies and broken social security systems? And how do we address a challenge of an AI era and ensuring that populations can cope with it and benefit from it? It's all going to require the public sector. So if I just take the first, there is no realistic solution to the climate transition that does not involve a globally coordinated system of carbon taxes. There's no realistic or fair solution that does not involve a globally coordinated system of carbon taxes. And Ngozi at the WTO is coordinating this with several other international organizations. It's still early days. There's a perception that it's unjust, it's unfair, it'll lead to inflation. In fact, quite the contrary. If we don't do this, the countries that will suffer most ultimately are the developing countries. They're going to be the worst affected by climate change. If we don't do this, it's ordinary vulnerable communities that will suffer the most. What we need is a system of carbon taxes coupled with subsidies for vulnerable households and a stream of funding for the developing world to allow them to engage in investments in mitigation and adaptation that allows them to keep growing. And that's a real opportunity. It's a fair solution, and it's the only realistic solution, and we can't keep ducking it. Second, there's a huge opportunity of redirecting subsidies. The IMF has estimated that about $1.3 trillion is spent each year in fuel subsidies. That's about 5 times more the amount of subsidies that goes into green technologies and green energy. We've got to redirect it. Redirect those fuel subsidies to helping vulnerable households, to helping firms to adjust, and to spurring renewables and other green technologies. That's a major redirection. It's fair, it's sustainable, and it's realistic. It has to be achieved. The third issue that's maybe the most neglected is preparing for an aging society with confidence. And it means rejigging in significant ways of social security systems and healthcare financing systems. It's not sustainable. Too many people who don't need support are getting support, and too many people who need support the most in healthcare systems are not getting enough support. So there has to be a reshaping of that curve of subsidies within healthcare to benefit those who need it the most. There has to be more spending on preventive or preemptive healthcare spending to help people stay healthy for as long as they can, rather than wait for the very expensive occasions when they have to end up in hospital, particularly for acute care. So fundamental reform to healthcare and fundamental reform to labor markets to allow people to stay engaged at work if they wish for as long as possible. Those are very important shifts in social policy. So we have to get real. The challenges we face are different from the past. We're not going to address them by just tinkering around the edges with rearranging corporate taxes and the like. It requires raising taxes to take on the climate transition. It requires redirecting subsidies to be fair and to ensure that as we age, no one is vulnerable, and we can actually sustain high-quality healthcare systems and social security systems. It requires change, and we discuss this very rarely. We have here 5 current and former finance ministers who've gone through years of discussion at the G20, at the IMF. We spend a lot of time talking about monetary policy. We spend very little time talking about fiscal policy reforms for a more secure future.
On that, can I just say on that point, fiscal reform in the United States, very difficult to do. We now have $34 trillion of debt. $34 trillion of debt. The interest on it is approaching our defense budget. And if we don't resolve this in the near future, something's going to happen to the dollar. The dollar has been the only reserve currency for quite some time. But if the United States can't get its fiscal act together, at some point, people are going to do what they did to the British pound and the Dutch guilder years ago when too much money was borrowed by those countries and their currency didn't become as valuable and therefore lost its reserve status. The U.S. doesn't have any real challenger right now to reserve currency status for the dollar, but it will if it keeps doing what it's doing. We have 122% of our GDP in debt, and we are, each year our budget deficit is probably about 25% of our spending, and we just can't keep doing that. But there is nobody in the United States government that I see is really seriously addressing that problem, but it will be a big problem in the not too distant future.
Thank you. Dr. Ngozi?
Well, maybe you're pointing to me because I was nodding so much when Taman was talking, and that's why he's a favorite. I mean, we have to look at what we need to do on the fiscal side to finance the green transition. The money isn't coming. The amounts are huge and the trillions needed. You know, you take Africa, for instance, it needs $190 billion to finance per year, up to 2030 to finance the green transition. What is it getting now? Minute amounts. How is it going to be raised? So we have to think of sensible things like, how do we raise that money? So that's one. The second is business. They're facing a lot of regulatory fragmentation. There are 73 different carbon taxing and pricing regimes in the world today. They are confused. When they go from one country to the other, they have to think about a different way and a different system. So how do we bring this together? So if we have a common methodology or framework for a global carbon pricing regime, I think that will help. And then we can use some of those resources that would be raised to help finance the green transition in those vulnerable countries that don't have the resources. So that was why I was nodding so vigorously. And I think developing countries need to get behind it. The international financial institutions have all been working on this in parallel. The IMF, the World Bank, the WTO, the OECD. And finally, we are coming together in one task force to try to see if we can put all our energies together and develop a common methodology or framework. We know that not every country is going to have a carbon price or tax. The US will never do it. They will approach it through regulation and subsidies and other means. But once we have a common framework, we can all measure what we're doing against that. And more importantly, we can transfer some of the resources raised to help finance the green transition. So thank you for raising that,
Yeah. Dr. Ngozi, I know you have to leave in a couple of minutes because you have an important meeting. So very quick question to you. Why has it been so slow? Is it because we're distracted with other crises? And are you confident that actually all of this is going in the right direction?
Well, it's so slow because, I mean, when you talk of raising taxes or prices, it's never a popular subject anywhere. As Tarman said, you have so many former present finance ministers on the panel, and we know what this means. It's politically difficult to talk about raising taxes. It's also politically difficult to phase out subsidies. We tried it when I was a finance minister in Nigeria, and we wanted to phase out our subsidies. We went halfway, but it was very politically sensitive. So that is why you don't hear great enthusiasm when you talk about raising taxes or phasing out subsidies. But I think the world, we need to take some hard decisions. You cannot have a situation in which you have $1.2 trillion in fossil fuel subsidies. A lot of it is in developed countries, by the way, not developing. And then we are trying to look for peanuts for a loss and damage fund. You have over $600 billion in trade distorting agricultural subsidies. And we are looking for peanuts for a loss and damage fund. When we get $200 million, we're all happy. We need to take those hard decisions, but they are not being done because it's politically difficult, and politicians will look at the short-term horizon. They want to be re-elected, right? That's the problem.
Thank you so much, Dr. Ngozi. I know you have to go. Minister Al-Jadaan.
I think a few points, and I listened to Mr. President, and we spoke briefly before we came on stage. I would like, first of all, I think let us agree that climate change is real. Risks from climate change are real, and we should work all together to find solutions that would help the planet and the livelihood of people. I think we are all in agreement. I remember in 2014, when Paris Agreement was reached, developed nations have committed $100 billion annually for developed countries to deal with climate change and for them to transition out of carbon-intensive energy. What have we seen so far? Almost zero. And I can understand Mr. President's enthusiasm about carbon tax and how it may change the equation, but then he linked it to two things. Subsidies to those who are in need. I agree, whenever you raise cost on your community or others, you need to look out for the less fortunate and provide social safety net. Agreed. The second caveat, Mr. President said, is we need to find a way that we channel part of that to low-income countries. We tried that and it failed. Now, so trying something else, similar to what you have tried before and expect different results, it's very difficult. There are a lot of political resistance from developed nations. Politically, internally. I mean, we have heard just now some of the comments. So to say that we will put the tax, but then we will direct some of it to low-income countries is going to be very difficult politically, extremely difficult. Third, I would just remind ourselves that while we are enjoying the heated conference place here, there are over 600 million people in Africa that have no basic electricity. Not intermittent, basic, absolutely no electricity. So to say to them, go and eat cake, why are you looking for a bread, is hypocrisy, in my opinion. They have their own endowment. We should help them get that endowment from under their feet. Gas, for example, let them fuel their own transition. Allow them to use their own endowment. Help them to use their youth, empower their youth, reskill their youth, train their youth. That is really what is going to change Africa and other low-income countries. Thank you very much.
Thank you so much. Minister Lindner?
I hope nobody tells my coalition partners and colleagues in cabinet that we are here considering raising taxes. Would cause serious problems for me domestically. Seriously, I would like to widen the perspective a bit. I completely share the idea of fighting global warming by ambitious action. But we should think about the right methodology. I think there is an alternative to carbon tax, and the alternative is a carbon market. In Germany, it is extremely costly to avoid further emissions. And I wonder if the same amount of money we have to spend in Germany would have an even better effect on other places, at other places on the world. For example, to invest in electricity production in Africa with renewable energy as part of a compensation of German steel industry and for their emissions could have globally better effect with lower investment. And it doesn't matter where carbon dioxide is emitted, it is a global challenge. So probably we should ask OECD to work on a common framework for a global carbon market, as they did successfully on the global minimum taxation. If I'm allowed to, I would like to add a second remark. To finance all our needs for transition, fighting poverty, and to prepare for the aging societies, I think there's one solution. Given the demographics, given the investment needs, I think we have to foster our productivity. And this is why I'm advocating for structural reforms in the labor markets, in technology, cutting red tape, being more competitive when it comes to corporate taxation. And, well, obviously, I'm talking about the reform agenda of Germany, but I think others have to face similar challenges. We in Germany, we have to do our homework, and probably we are part of a model because others have similar challenges. We had to solve our debt and deficit issues, which has made me becoming the loneliest minister in cabinet. But we succeeded to solve our debt issues, and now we have to strengthen the supply side. And I know what some of you are thinking. Germany probably is a sick man. Germany is not the sick man. Germany is, after a very successful period since 2012 and these years of crisis, Germany is a tired man after a short night. And the low growth expectations are partly a wake-up call. And now we have a good cup of coffee, which means structural reforms, and then we will be continuing to succeed economically.
Thank you so much, Minister. We only have 5 minutes left, so I'm going to call on Madame Lagarde, and then David, President and Minister.
So thank you very much. I would like to flag a couple of areas where I think there can be hope and there can be trust if we deliver. And I'd like to start with 2 observations as a follow-up to Tarman. Your point is well taken about taxation, Tarman, but you have in this panel, in the discussion we're having, a good example of how difficult it is. Because tax issues present a huge heterogeneity. Whether you're sitting in one country or the other, you can have a tax burden of 50% of GDP or 10% of GDP, and you're starting from a completely different picture. So that should be taken into account. Second, there are currently instruments that have been laboriously negotiated at the OECD level to put in place those 2 pillars, one that institutes a minimum corporate taxation, and the other one that proposes to allocate profits of large corporates around the world on the basis of where the activity is generated. These agreements have been approved at the OECD level. They just need to be ratified. So it's there. Let's get on with it and move, because otherwise we will move to more fragmentation of tax, and we are seeing it with the carbon tax border adjustment here and there, and that would be more cacophony added to the risk that we see. And that takes me to my second area where I think there is hope if we, I'm sorry that Ngozi had to go because it touches on trade. Everybody will agree, no matter how much we talk about deglobalization, that globalization had massive positive impact in pulling people out of poverty, hundreds of millions. If we listen to Ajay Banga from the World Bank, this virtuous path on which we were heading is now at best stable, at worst declining. More poverty than less poverty. Well, if we look at trade and the decoupling or the de-risking, however we want to call it, it implies 2 things. One, there will be different and new sources of supply and new patterns of trade, number 1. Number 2, because there is more vulnerability associated with supply, it may well be that the cost will be higher in the long term. And maybe that's not such a bad thing. Maybe we've been relying on this principle of efficiency over security a little bit too much, assuming that everything had virtually no cost, assuming that labor cost had to be minimal and reduced over the course of time. Well, this can change, and maybe can change for the better, to bring those people who had the benefit of globalization and were taken out of poverty, also out of this recessing poverty that is at risk of bringing some of them back down again. So I see a lot of positives on those 2 fronts. I had a few other items, but I'll save them for next year.
David, and then
paraphrase President of my country, ask not what the World Economic Forum can do for you, but what you can do for the World Economic Forum. Now, what do I mean by that? The purpose of the forum, and I can't speak for it because Klaus is the person who is really the most responsible to be able to speak for it, but I can say that the purpose of for this purpose is to inspire people. What we've tried to do in this panel and in other panels around the World Economic Forum is inspire people and educate people. And hopefully when you go back to your country, you'll educate yourself about some of the things that we talked about here that you might be inspired to learn more about, and try to pick one issue of the ones we talked about where you make yourself not only well educated about it, better educated than now, but try to make some difference in your own country to try to bring forward some of these ideas. Because the only way we're really going to be effective, the World Economic Forum, is we have people that come to the sessions, and those people are watching on streaming, they are going to take these ideas and do something useful with them by working in their own countries to kind of educate people about these things. And that's what I really hope all of you will do, is take something away from this session and say, I'm now inspired to learn more about this issue or that issue, and I'm going to try to do something in my country to make it more likely that that will happen. Thank you.
Thank you. In 30 seconds or 1 minute, Mr. President, what are you positive about?
So, I agree entirely that we need carbon markets. That itself is a complex endeavor, but we need to develop it and we need to make it global. It's not a substitute for carbon taxes for a very simple reason. Governments are going to have to invest significantly more than they've invested before. We want the private sector to fund most of the transition, but about a third of the investment is going to have to come from government because of externalities and other reasons. It has to be funded. It has to be funded. And we can't, there's no magical thinking here. Funding requires taxes of one form or another. The alternative is more and more borrowing, which Christian will be the first to agree, is not sustainable. So let's not duck the issue. Our real challenge is political. It is unpopular to raise any taxes. You have to design taxes together with subsidies so as to make it acceptable and fair. And that's the task of finance ministers. And we've got to coordinate this as much as possible globally so there are no leakages. Design taxes and subsidies so that we can get ahead on this, invest at a higher level, and make it fair for ordinary people. The developing world, I quite agree with both Al-Jadaan and Christine. It is an opportunity. We have the opportunity, in fact, of growing green energy-powered industry in parts of the world which have lots of sun and wind. We have the opportunity of shaping growth strategies that are sustainable. But it's going to require investment. It's going to require support from the advanced world, going to require a much enhanced role for the international financial institutions. We can achieve it. So all I'm saying at the end of the day is our political antenna have gotten too short. We're all looking at the next elections in a whole range of countries. And the consequence, if we carry on that way, is going to be much more pain in future and a much higher hurdle that that future politicians will need to cross. So let's start moving now, face things in realistically, make sure that it's fair and just, and avoid piling up a large problem for the future.
Thank you so much, Mr. President. You got the optimistic guide to 2024 and the pessimistic guide to 2024 and beyond. Thank you so much to all of our panelists. And I would love if the audience could also stay in their seats, also the panelists, because it's my great pleasure to welcome on the stage the President of the World Economic Forum, Borge Brende, for the closing remarks of this 54th.
That was Bloomberg's Francine Lacqua moderating the Global Outlook panel. This marks the end of the week-long World Economic Forum annual meeting in Davos. I'm Danny Berger. Surveillance is next.
There is some reason for optimism. If you look at inflation around the world, it's on a downward glide path.
If you emphasize the word landing more than soft, I think we've achieved it.
We're going to see volatility, but the trajectories are in place for lower rates, for less inflation, but not on an even keel, if you will.
I believe that the Fed is going to take its time, especially without a recession.
They're going to start lowering at some point. When they're ready, they're going to be prudent, they're going to be thoughtful.
This is Bloomberg Surveillance, live from the World Economic Forum in Davos.
From Davos to New York City for our audience worldwide. A very good morning. It is Bloomberg Surveillance alongside Scarlett Fu. I'm Manus Granny. They brought you back from the end of the day and they've resurrected me. Good morning, Scarlett. How are you?
Good morning. This is so great. We haven't done this before at this hour, at least.
14 years at Bloomberg, and this is the first time that we're in the same zone. And it's been a shortened trading week. They've been in Davos. The rhetoric there has been all about when will the Fed come? Will they extend and pretend? You just look at the rates market. This rates market market has backed up the truck, up 20 basis points on 2s and 10s through the week.
Everybody has an opinion on when the Fed will cut rates. Nobody knows anything, including the Fed, because they're data dependent, right? And the data this week indicated the U.S. economy is holding up just fine, whether you're looking at retail sales for December or jobless claims, which really shows a bedrock of U.S. labor strength. So there's repricing going on, and there's going to be a lot more repricing in the days to come before the Fed meets on January 30th and 31st.
Yeah, they're getting incrementally better pieces of data. And, you know, good news is bad news. That awfully trashy line that we have, good news is bad news. Well, 20 basis.
It's not, because the NASDAQ is at a record high.
Exactly. And the Mag 7, if you look at the components who actually benefited the most yesterday, it was part of those magnificent 7. And if you look at the flow show from Bank of America, I just grabbed some of the numbers from Hartnett's note before it came on air. So the Mag 7, you've got technology stock funds, and this is the interesting point. As these yields back up, you've got technology funds taking in $4 billion over the space of 2 weeks. So as for breadth, hello, I can't see it.
Right. The Russell 2000, which was supposed to really extend on its gains made at the end of December, what happened to it? It's kind of faded. We're going to talk about all of that because the January effect seems to have not taken effect at all.
No, not at all. I think it's interesting when you listen to the voices that have come from Davos. We caught up with a multitude of them, with Francine, with the surveillance team. Sure. Schwartzman saying, you know, the timing of the rate declines won't be clear. It's going to be baffling for investors, and I think that's what we have at the moment, which is disinflation. It's behaving itself, but there is this view. Waller did it, Bostic did it. They are pushing back the timeline on these rate cuts, and this market has yet to really adjust to that.
Right. Certainly not 6 rate cuts, which is what the market had been pricing in, and the Fed itself sees something more like 3. The other question is, what will the election do, or how will that affect how the Federal Reserve moves? Because if it doesn't start cutting rates until the second half, the closer it gets to the election, the more likely people will accuse it of being political if it does start to really cut rates into the end of the year.
I think my favorite scene so far was the obsession in Davos about whether Trump would run on the ticket and whether he would win, and there would be another 4 years of Trump in the White House. And it was that moment when Christine Lagarde, when she was asked what she thought, she sort of paused for very dramatic effect, because we're good at that, Scarlett and I. And she goes, I'll have some coffee.
Yeah.
And then she proceeded to answer, they're nervous as hell.
She gave a very diplomatic answer. Of course, she said it's up to the American people to decide, but you can be sure that there's a lot of scrambling in the background of people trying to, look for their old playbook in terms of how do you deal with another Trump administration.
And of course, 2 hot wars, the funding for those wars. We're going to talk about those issues through the next 3 hours. We've got 3 hours together. Are you excited?
I'm thrilled.
We're going to turn up the temperature in here because we're both freezing. Let's talk about markets. We talked about the backing up of the truck in the yields. Let's just give you a quick snapshot. There we go. S&P 500 up 0.4%. Equities continue to trade higher, even though investors dumped over $4 billion worth of U.S. stocks in the past couple of weeks, according to the Bank of America Flow Show. Euro dollar, I know you wanted to talk about that, 108.81. We've got 10-year yields trading at 4.13, up 20 basis points, 21 basis points on the week. And the oil market is still, my favorite word, phlegmatic.
What does phlegmatic mean?
It just means not paying attention. It's really, really sort of flaccid in terms of its reaction function to the issues in the Red Sea, and for as long as it doesn't take place in the Strait of Hormuz, that oil market is going to focus on supply.
Yeah, but in the meantime, it is something that everyone gets very nervous about. We see WTI approaching 75, Brent approaching 80, and kind of stuck around those levels. We know that there is plenty of supply for now, and OPEC Plus is scrambling in terms of trying to figure out how they calibrate everything.
Yeah, and the Russians are exporting like Billy. But let's take this confluence of issues to Dan Morris, Chief Market Strategist at BNP Paribas Asset Management. Dan, good to see you. Waller backed up the rates truck. Bostic helped him. We've just romped home 20 basis points on 2s and 10s this week. Has that jolted your thinking in any material way? Good morning.
Good morning. Well, I think what's notable is the market actually seems to be listening to what the speakers are saying. We certainly had times in the past when the Fed's tried to talk against what they see as an inappropriate market narrative. Sometimes the market listens, sometimes they don't. It's encouraging. We think that the market is listening to what the Fed is saying, and importantly, not just because the Fed FOMC members are saying it, but because we think it's supported ultimately by what the backdrop is in terms of inflation and growth, which is that inflation is not going to decelerate as easily or as quickly as the markets expect, and that's why the Fed isn't going to cut as much as the market had been forecasting.
When we talk about the market, is the bond market hearing something different from all this Fed speak than the stock market? Because as Manus and I were just talking about, yes, bond yields have moved higher, but so too have growthy stocks like the NASDAQ 100 making a record high.
I'm sure we've got to keep in mind that at least on the equity front, it's not only about rates, whereas clearly with fixed income, it is what's happening with rates. And I think we've got to calibrate what the impact is with higher real yields, which you're absolutely right, should have a negative impact on growth stock via valuations, but we're also in the midst of the earnings season. So at times, and we actually saw this in a major way last year, earnings optimism can outweigh temporarily at least what the impact is on higher discount rates. So we had the big AI boom pushing through earnings for tech stocks last year. Maybe we're seeing a little bit of that enthusiasm at the start of this year.
Yeah, the enthusiasm coming from TSMC, giving the whole chip sector some renewed hopes that they're turning a new page and they're at the start of a new cycle. How long does this enthusiasm last for? I mean, is it a temporary boost or is it something that'll last?
Well, broadly, I think for tech earnings, if you look at consensus estimates for this year, tech earnings are supposed to be up in double digits. Now, maybe it's not going to be quite as high as that for the year, but I think double-digit earnings growth out of, say, a broad NASDAQ 100 index is I think, what investors essentially are counting on. And so far, tech stocks have been able to deliver. So as long as we're in that range, it's better than about any other index can provide, and that's certainly why the enthusiasm is there, the flows are there, and also the valuations.
The question I had for Binky Chadha yesterday at Deutsche Bank, his target's 5,100 by the end of this year. And I asked him, is that predicated on earnings expansion, or can you deliver that without 5, 6 rate cuts? And he said, I can deliver, my estimate is 5,100 without any rate cuts at all. Do you think you can get that kind of momentum in equities with no rate cuts? Because that's quite a bullish landscape that you paint. It's predicated on earnings.
Perhaps it's a hypothetical. I don't know how much it's worth exploring, given that we almost certainly going to have rate cuts this year. So, I mean, that's got to be part of the calculation you have for returns for equities. You're right, it does make a difference if it's, say, 3 cuts or 6. But ultimately, if it's lower rates at the end of the year than we have today, higher earnings at the end of the year when we have today, I mean, that seems to be a pretty supportive environment for equities.
When you look at the backing up of yields that we've had, you begin to ask the question, will there be a re-entry point that you will see bond buyers come in on the 10-year government bond? When you see 20 basis points in the space of a week, does that enrich the bond market, do you think?
Well, certainly if we get much higher than where we are today, I think you're more likely to see some portfolio managers going overweight on the outlook for nominal yields. I mean, right now, I think we're probably still in a position where the market needs to still recalibrate its expectations for the Fed. So I think the risk probably in the near term is more higher rates than lower rates, but certainly if you get high enough, see what the next information we get on inflation. If it's a bit higher, which we think is actually a risk, we could get a bit more inflation premium baked in, and that could be the opportunity you're talking about.
You know, Daniel, investors like Bill Gross are betting on a steepening of the yield curve, a normalization of the yield curve where you get rewarded, of course, for taking on more risk of lending money over a longer term period. What is going to be the catalyst for that shift? Because we've been waiting for a while.
Well, it's certainly been the timing of the Fed cuts that's really going to be driving this steepening of the curve. So again, it goes back to, is it at all realistic to think the Fed, or was it even realistic before to have thought the Fed would cut in March? We never really thought that made a whole lot of sense. So we are going to have to wait a bit yet, but we do think that's going to come.
You would also point out that the rally in real rates since the beginning of the year looks a little bit under pressure. So, how much attention do you think the Fed are paying to the real rate scenario? I mean, it's core to what they're about, isn't it?
Well, absolutely. I think ultimately, though, I think really where the discussion needs to take place is kind of where do we need to be in real rates, say, 5 years from now? If you look at the long-run projections from the Fed for the Fed funds rate versus what the market has in for the long-run Fed's fund rate, you still have about 150 basis point gap. So there's a real discussion to be had about what is the neutral rate of interest for the U.S. economy, how strong can it grow at a particular rate of interest, inflation, all these things. So we don't want to forget when we focus very much on what the Fed's going to do next, really is going to be these long-run discussions that are going to drive both markets, equities, and fixed income.
We've just spent a week with lots of guests in Davos talking about the risks from the Red Sea, the risks of U.S. politics, the risks of 2.5 hot wars, the half being in Taiwan and the U.S., Taiwan and China. What is the most material risk to delivering underwhelming equity results this year?
I guess if we look back to the Russia-Ukraine conflict as an example of where something that's clearly a very significant geopolitical event can turn into a very significant macroeconomic or market event. And what was not necessarily unique but unusual about this situation was the direct impact on energy prices because of Russia's dependence on Russian natural gas. So if you think about the geopolitics, it's then where do you also see a very immediate link to some kind of macroeconomic factor. So I think that's going to be it. So, we initially, of course, always go to the Middle East and the risk of significantly higher oil prices that would have a negative global impact, and that probably is still the outstanding concern that we have.
Yeah, and as yet, we still haven't seen any material war risk premium come into those oil prices. Dan, thank you very much. Dan Morris, BNP Paribas Asset Management, our first guest of the day. There you go. So it's interesting. Nobody got any of the outlier risks right last year. They didn't get SVB. They didn't get any of the bank crisis in March. They didn't get the Israel-Hamas, of course, shock attack and terrorist attack and ensuing war. These are all black swan events, and by their very nature, you just don't know what they are until they're in your face.
The other black swan event was the U.S. economy doing very well and holding up and not going into recession. Because at the start of the year, everyone was predicting recession.
Exactly. My favorite line goes to Paul Donovan, I think, for 2023 from UBS. Never underestimate the hedonism, or never go short the hedonism of the U.S. consumer.
We like to spend.
A lot to spend. Let's have a quick snapshot of what's going on in markets. It's just gone, where's the clock? Different studio, 6:13 a.m. This is what we've got. Stocks are rising. Stocks are rising. Bond yields are also on the march this week as well. We've gone back to flat 413, but we've put on 20 basis points this week, haven't we?
Yeah, it's been a big move for this week. We're not seeing a whole lot right now. Of course, the big data points already came out this week, so we'll see how it all shakes out ahead of next week.
Indeed. Okay, we'll keep you abreast of things. 7 a.m., we're going to catch up with Margie Patel of Allspring Global Investments, see whether she believes in the hedonism of the U.S. consumer and the backup in yields. This is Bloomberg.
To keep rate World Cup. This is a 3
as the economic picture
covering the intersections of Hollywood, Silicon Valley, and beyond.
From the world of politics to the world of business, every weekday at 5 p.m. Eastern Time, hosts Joe Matthew and Kaylee Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power live around the world starting Monday, every weekday at 5 p.m. Eastern, only on Bloomberg Television. Context changes everything. The 2024 nominating contests are here, and the candidates are making their cases to New Hampshire voters ahead of the primary.
And we're off
to New Hampshire.
Bloomberg is live in the ground, bringing you the fastest news,
Trump is leading by a long shot.
insightful interviews,
And at the end of the day, that's what the American people want.
and the most informative analysis about what it all means for November's presidential election.
What is your path to the nomination?
It all starts Monday in New Hampshire, only on Bloomberg.
The Trump election, the first time around, we all looked around and thought about putting in hedges.
The whole problem is completely unpredictable. But, there's no appetite for that.
When we look at the likely policies, there may be some serious concerns.
When he was president, spending about 75% of the NATO budget, and the rest of NATO was only doing 25%. This was exactly Trump's main issue, that we were not spending enough, and he was right.
There's very little sign of fiscal discipline from either party right now, which is, I think, concerning.
We are all concerned about it because the United States is the largest economy.
I think there's just too much to be decided. If you look back the first time, there was a lot of concern, apprehension that didn't necessarily materialize.
Everything changes if Trump wins, and mostly for bad ways.
That's the opinion coming from some of the top business leaders in Davos on the possibility of a second Trump presidency. We'll dig into that in just a moment with our guest, Wendy Schiller. Snapshot of risk for you this morning. Equities are higher, bond yields are flat, but they put on 20 basis points in the week. 413 is where we trade, and the euro dollar struggling for direction. We're going to get the University of Michigan inflation expectations a little bit later on, and crude is up barely 0.1%. Let's reflect on that series of signs with Wendy Schiller, Policy Director at the Taubman Center for American Politics at Brown University. Good morning, Wendy. They are nervous. The global elite are quite literally shaking in their boots that there's a second salvo coming towards multilateralism. Is that well-founded?
Well, I think you can argue that pulling out of international agreements, ending the Iran-U.S. nuclear agreement or multinational nuclear agreement, pulling out of the Paris Accords, that signals that the United States will retreat. Certainly the statements that former President Trump made and continues to make about Russia-Ukraine suggests not as strong a commitment to Ukraine as under the Biden administration. However, at the moment, the Biden administration and Congress can't get a Ukraine aid a bill passed right now, and there are some questions about the efficiency of that aid and whether there's any corruption in that aid and how long will this continue. So in some ways you see, okay, I can predict from the past what the Trump administration would do in the future, but like everything else, the world has changed, and so it's really unclear where Trump will stand on this. But you can imagine he will be less engaged and less willing to make the United States engaged in international conflict.
If you look at, and we'll touch on this in just a moment, obviously the U.S. playing its role in the Red Sea, launching missiles against the Houthi rebels in Yemen. So Biden's administration is walking the walk in regards to defense. But one would have to question whether these past 4 years has left the U.S. still as that real backstop to the world in terms of security. Is the Biden administration really fundamentally different to its global position as Trump was?
Well, Trump would probably say the same thing as Biden says, which is this is really about commerce. This is about attacking, civilian commerce ships, that the international community's commerce has to continue and that you can't threaten the commerce. And I think Trump would be on the same page there. The Biden administration has softened a little bit on tariffs with China, but not as much as people expected. And our relationship with China is probably, you could argue, no better, really, substantially than it was under Trump, even though the Biden administration has made efforts. So when you think about outcome, you think on foreign policy and international engagement, we don't see as much difference between Biden and Trump as people thought. The border is a little bit different. The rhetoric from the Trump administration and the actions from the Trump administration were significantly different. And that's exactly what Trump and the Republicans are running on now, saying when we did it, the problem was less acute. You can debate those numbers. And now with Biden, the United States is less safe from the southern border. That seems to be resonating if you look at the primary poll results, at least in Iowa and now upcoming in New Hampshire.
One thing that a future Trump administration would have to deal with, of course, is what's going on in the Red Sea. The tit-for-tat attacks there between the Houthis and the U.S. and the U.K. We did hear from President Biden just yesterday on how they're stopping the Houthis and whether it's been effective. Take a listen to what he said.
Well, when you say working, are they stopping the Houthis? No. Are they going to continue? Yes.
So when you say, are they working to stop the Houthis? No. Are they going to continue? Yes. That's not a very helpful answer. It doesn't really give us much of a roadmap for what's to come. Can you give us a sense of whether there is a correct way of addressing this, or is the Biden administration creating a situation that basically has the potential to blow up into a bigger crisis?
Well, I mean, I think the Middle East is really, hot right now, you can argue. Certainly when Saudi Arabia and the Houthis and Yemen were having conflicts and there were a lot of civilian casualties, the United States was saying, don't kill a lot of civilians. We don't see to have the same rhetoric necessarily with Israel, although now the Biden administration is saying don't kill a lot of civilians after many civilians have died in Gaza, in addition to the civilians killed in Israel. So now the United States is in a position of, unless we're going back full scale, which there's no appetite for amongst the American public, you can argue, on either political side, that, what can we do? We have destroyers, we have ships, we can do drone attacks, which is what we do. But, I think the forces in the Middle East that want to be disruptive do not believe the United States will come back full scale. And I think that's where the looming Trump administration, that makes it even more certain in their mind that the United States will not come back full scale.
Of course, it's not just the executive branch's responsibility. You need to get the legislative branch involved as well. But Congress has their hands full for most of this month and the rest of next month in trying to come to some kind of agreement after they did avert a shutdown. They need to come up with new agreements post March 1st and March 8th. Can Congress get anything done beyond passing yet another continuing resolution?
That is an excellent question. I think we're all looking at that because I think the issue is that there is an agreement in place. There was an agreement struck with the debt ceiling, actually agreement to raise the debt ceiling. And that agreement has, sort of called top line spending, right? How much can we spend? How much do we agree? There are people within the Republican Party, very conservative, who want to renegotiate that, who want to cut spending even further than that agreement. And the Democrats and President Biden are holding firm. A deal is a deal. We're sticking to those numbers for the rest of fiscal year 24. That will be the fight. And Johnson has to really make sure, Speaker Johnson has to make sure that he can negotiate an agreement that can get through the House. He's done it now with the short term. Can he do it with the longer term? This will be absolutely something to do with Trump. Trump doesn't want the GOP to look like he can't run the country. If he's the nominee, he wants to run with a strong GOP at his back. And if they do shut the government down, that suggests that they can't function. That hurts Trump. And you can imagine Trump will be on the phone to Johnson every single day saying, don't make me look bad.
Will Johnson last the course? I mean, he rebuffed last-minute sort of attempts by the ultra-conservatives, the Freedom Caucus. He's not fulfilled the promise that he made to them in November, which is no more temporary extension. Will he last? Will he last the mile? Is Trump fully behind Johnson? Is that what we look towards?
I mean, Donald Trump is only fully behind Donald Trump at any given moment, on any given day. So no politician can ever expect that he will stay loyal. You have to basically, feed him, right? And so every day they'll be talking. And if he's doing something that makes Trump look good and is supportive, Trump will stay with him. The Republicans really have to start to think in the Congress going into summer and fall where they're vulnerable, where they might lose seats and lose the majority, and how popular Trump is. That's the complicating factor for the party itself and for Johnson. Johnson wants things to go smoothly, and as you get closer and closer to November, you can imagine most of the GOP wants things to go smoothly as well, because they like being in the majority more than they like being in the minority.
Very, very quickly, in 30 seconds, we're going to New Hampshire. Haley, DeSantis, just very briefly, what do you think the call will be there? Strong innings?
At the moment, it looks like Trump has momentum. If Haley can show closeness, Haley stays alive till South Carolina.
Okay. Live to fight another day. Wendy Schiller, thank you very much. Brown University with her very latest on thoughts. I mean, that's an imagery, isn't it? Feeding the leader of the GOP.
It's all about momentum, the big momentum for any of these political nominees, right? And right now, Trump has it. DeSantis has lost it. Haley's trying to recapture it.
There you go. Coming up, we're going to talk to Lindsay Pizza of Stifel right here on Bloomberg.
This will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some points that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in?
I'm in.
I'm in. We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
A very good morning. This is Bloomberg Surveillance alongside Scarlett Fu. I'm Manus Cranny. Let's give you a snapshot of where we are 30 minutes into the show. We've got a pretty much risk-on flow show for you. Equities are higher up